Okay, so this is the second time we come down halfway through the first orange arrow, which is target one of two. And the bounce takes us to the stopping point the third time. That's the third push at the stopping point. Leaders today are unusual. It's not the mega caps, although we do have Google leading the pack. And it is these guys, but with a twist. XLV, it's not the XLF. It's the XLV and things like the XLB and P and E. So that is a strange situation. Somebody's asking me about Boeing. What am I doing with Boeing? I added to my short. I added another short at a safe distance for, I think, October. It's like a 270 credit call spread or something like that on Boeing. If I wasn't short the small caps, I would add to my shorts today. On the small caps, something safe, something distant, something that doesn't need a lot of paying attention to. What kind? Let me see here. Take your pick. RUT, IWM. The IWM is liquid, and the RUT is cash settled. So I like the cash settled part. But liquidity on the IWM is more attractive if I'm looking out in time. So if I go to, like, if I wanted to throw something for September, okay, current price of the IWM, say they're trying to get to 220. If I go to Delta 13, that's 245. So I can sell a 245 call spread and create income from that. Okay, so I'm not broken up about it now because I can see it can go another $3 to $5 of upside because of the sentiment and the momentum that the small caps have and the catch up trade that they're trying to do. But if somebody is not short the IWM or the small caps in any way, shape, or form, they can start these long distance shorts that allow for upside. Here's another proposition. Let's say I sell 10 of these and I collect $500 and I buy something for $100 that is bullish. I can ride the wave for as long as it continues with the bullish part. And eventually the rally will fade and get me both wins. And if it doesn't fade, I'm well protected. I can deal with the risk that I opened because I have greens collecting along the way. This is one way to take a position with pretty good confidence because you are hedged immediately from the get go. We have a coin flip tomorrow. We have same level, yes. We have a coin flip tomorrow with CPI, a coin flip the day after tomorrow with PPI, and the default reaction is up, except for one scenario on either of those. If the numbers are not just bad, but way worse than expected, bad numbers will not cause red ticks because if they're expecting bad numbers. I doubt they're expecting good numbers. So whatever they're expecting, forecasts, whatever they have, if it comes out that or better, we're going to rally. And if it comes out hideous, completely blindsided, we will have a few red ticks. Last night, in case you missed it, this is the most important part of the day. I've said this many times, but some people just came in. Last night, this large blue dotted box happened. We had a spike to 602.60. We had a drop below all of the lows from yesterday at 597.80. God knows on what. But that happened last night. That box is there because this here platform does not show us these highs and lows. This thing was up here last night. Very shortly thereafter, they dropped to here last night, which were all the targets that we had from yesterday. They all filled in. And here we are. This blue box right there is yesterday's range. So they are pushing up against yesterday's range. These red W's that are bearish to this first arrow, which they gave us 2/3 of it, half, twice, and the second arrow, they have not broken it yet. They have not closed above the stopping point of these red W's. So this is a really, really interesting battle. And the leaders are weird, including oil. So when we were here, I said you can bet your bottom dollar they're going to go to the X because the KRE broke out, and wouldn't you know it, they went to the X, and the KRE is still broken out. So I'm going to keep my eye on this stinking stock. Can you believe it that it's been the best rabbit there is? Okay. The second best rabbit is the XLF, and it needs to hold the lows from yesterday. All right. So if I'm bearish and I'm losing from a credit call spread, I buy myself more time. So if you're still in a credit call spread on the QQQ, for example, I would roll it. It's free to roll. You just buy yourself more time. Rolling includes closing one and reopening one that looks like it. Yes. And then whether do you want to sell a when you roll a credit call spread, you have the opportunity to sell a credit put spread to hedge your bet. That's also advisable most times. Hello. Hello, YouTube. Okay, so CRCL, you guys mentioned it today. Somebody's asking about it. They said opinion on CRCL. It's brand new, no? Opinion. I don't know much about it. Let's see. So if it does have options and you're asking me my opinion about the stock, okay. So I can tell you that losing this level on a closing basis might bring you a small dip, but that's just a trade comment. I don't know what to say about the investment part. This P&L looks okay so far. And then you have a base here. And you should consider the fact that this stock could be at 25 at one point. So the love for crypto will probably impact that company, even though they are a stable coin. It's a sales job. They need people to be interested in that coin. It's a stable coin. So it does go up and down in value, but it's like, how popular is it of a coin? Do your homework on it. If you wanted to buy it as a share, I would rather sell puts to own it. So if you missed out on the IPO and you want to get lower prices than now, you sell puts to get assigned shares. Happy birthday, Tom. Five oh, right. Is it? No way. 50 cents. Okay, that's the fourth poke at the high. And we checked on the algo flow, still bearish divergent and -6 yesterday as well. That doesn't inspire upside. But what happened is the XLV is broken out. The XLE is probably broken out. So we have like new blood leading here. This collective used to be about one thing, and now we have something else in it. Let's go to 5 minutes. Look at the strong XL posse breakout. Okay. And XLE, are you participating? Yes, big time. Wow, Chevron, Exxon. XLB materials, not today. Well, not as of this last minute. XLP, not anymore. So it's XLV and XLE. They're vulnerable. Those things move fast. So this rally needs to change hands. Like something else needs, like the XLF needs to come back up to 51.3 and tag these guys. I don't know how much steam those two have. People in Zscaler, I'm going to repeat my risk. If it doesn't come up to 304.5 or higher, it's at risk of 290 or lower. Okay. I put an arrow here earlier today. I know some of you are in it fast. There was another ticker, NVTS. NVTS. Okay, NVTS established the place that they cannot lose today, 8.09, 8.1. If you lose that, you risk losing 8. Small, tiny. How about I say it differently? If it doesn't break out, it's heading to 7.95. That's, tiny changes, but with calls. 8 is target 1, 7.95 is target 2. How much of that, how much will that break the momentum is the question. Okay, let's get us a swing trade here for Tom. Tom wants a birthday gift. All right, Tom, we have a setup that could get you. So I'm going to move this arrow to here because it's still available, but it hasn't played out. This way, visually, it still shows you what we were looking for, but modify it a little bit. So I'm going to raise it to have more realistic expectations. And this one, I don't know if I'm going to put it there, but it does go hand in hand, and I'm going to raise that one a little bit. They went just a little bit above the stopping point. They only closed one time above it, so they're still fighting for it. And this is a 15-second chart, so it's very, very reactive. Okay, so my words this morning were on the ES, if we don't break out, we're going to 59.70 on the ES. Okay, keep on puts, hold puts. Let me see here. I would be holding a put and the SPY with a stop. 601 put, expiration today, 0.98 cost. We might head to, this is for fast traders only. If you've never done it, we might pop and drop, but I think we will end up there. And it's early enough in the day that I don't have to be accurate, surgically accurate with timing. We might drop to 600.3, which would fill both of these and then some. Will basically take us to the middle of the range of last night. That would be insane. Also, it would just bring us back to the middle of the range from yesterday, which is this blue box. So I'm going to change this blue box to white so I can just say white box. The white box is yesterday. The blue box is last night. Look at how much upside there is. So if markets like to go and revisit the overnight highs and lows, so in theory, we want to go up here and down here. today. How likely is that? It would require some help from the headlines. Okay, that setup is that those 3 candles are one too many for my liking. Those 3 candles, this is one too many. That one really mars that scenario. Doesn't eliminate it completely, but it definitely mars it. So these guys are getting help. Maybe the XLF is now pitching in. Not broken out, but definitely some green ticks. NVIDIA, no. So it's not these guys. It's something inside the ETFs. Look at the small caps exploding higher. They're up 1% and holding. Boeing reverting. I added shorts to Boeing at the highs of the day. So I don't think you can add the same shorts I added. It's no longer on offer. The VIX is stabilizing. And the KRE is long story if you don't know why I'm looking at the KRE. Still has not broken the high of the day. Palantir broke out this morning and it's off the highs. So the XLB is exploding, but it's going into its its highs from yesterday. So it can really accelerate if they break out the XLB, the materials ETF, from 89. If you take out 89, you have a full dollar above that. And that would catapult this bunch a lot higher. Look how tight these things are. And this includes a super spike from Google. So if I go here and look at the heat map and I go to the S&P, you will see how Alphabet stock sticks out. I mean, it's not usually the kind of stock that does that, but of late it has been very fluid. There's a lot of buzz around its AI. I think it's all horsepucky. So this paragraph you gave me says what I said. In the morning note, I said we have an imminent situation, 6090 SPX or 5880. And this is the next move. It's either up or down, maybe pop and drop or drop and pop. But I don't think we stay here a long time. So if you're interested, I shorted Boeing through a bear call spread, a credit call spread for October at 270. It paid $50-ish. I don't think it would pay near that now. Let me double check. I said it as I was doing it. It didn't fill the first time. I tried it again. One moment. Similar order. Well, it still is $43. Interesting. 270.75 for October. We're a mile away from it. That's pretty weird. Okay, so the put I took is down 11%, not the end of the world. But what is bad is that they broke out, and now if they don't come back down to 601.1, If they don't lose these two candles, they have the opportunity to establish it as a base to come back and attack it. So if you bought my put, this is your exit for an 11% loss. If you took one, that's literally $11. I'll leave it up to you. I still like the setup of a disappointment because of this huge overnight uh, whipsaw. So it's only greens on the whipsaws today. We'll see. And the VIX is not lower than yesterday, and the VIX futures are finally stabilized. It did go lower, and we'll see how that plays out. Oh, by the way, if you took my short on SDX, you have greens. I'm not telling you when to get out. Okay, yesterday we shorted SDX. We're up 11.5% overnight, and it's a straight up put purchase. You can spread it if you want to. You can now turn it into a diagonal. I'm not interested. That stock needs to be lower. I don't care what anybody says. 40% haircut on sales 2 years back to back, and the stock is at all-time highs. That makes no sense in any scenario you can imagine. If I'm missing a piece of the puzzle, set me straight. Okay, trade update. I'm here. I'm just updating a couple of people. Okay. 9% down on that put. Is this a top top of what today or all-time top? I don't call tops like that. What we do is we look at the behavior. Okay, so far they bought dips and made higher highs today. So I can't call a top until I see a change in behavior. It's a topping formation. That's what you would say. So you can't just call a top. The top is not a point in time, although in hindsight you would say, oh, that was the top. But for me to say it's a top, I would need to see behavior that changes. So far, every dip has yielded in a higher high. Why would that be? Why would I say that this one is different? Okay, so show me you can stop at 601.60 before you can go to 602.10. The overnight high is 602.64. It doesn't show up here, but it did happen. The top of this blue box is the happening of last night. I was live, I was in the Discord, I was chatting it up with Norman and company, and that actually happened last night. This platform does not show it. You want to see it? Okay, here. This was last night. That's the futures contract. So right here, the coming up to 60.34 is the easy part. Let's see how close they can come up to 60.42 and break out. Okay, so that is the SP. This we're going back to the SPY, which is the ETF, versus the futures contract, which trades nearly continually. So, is this the top? Well, that is a pretty bad wick, but they seem to have no issues tag teaming bulls, soldiers. XLV still broken out. The KRE looking to break out. The CL no let up. So why, ask yourself, why is oil flying off the shelf? The price of crude oil. Ask yourself that. We have more than ever we've had with the U.S. can be a top producer of oil, if not already is, and oil prices are rising. Just ask yourself, how is that happening? Why is that happening? Okay, the TLT completely undecided. And Uber from breakout to a breakdown. So Uber broke out to a new high of day and broke down to a new low of day beyond. So it's another engulfing candle in Uber. I am short. I will be closing my short to free up some cash if they keep pressing me on Palantir. Whew. Do I know why? Okay, I missed it. We got our money back on that put. We didn't get our target quite right, but so here's what just happened. I got my target except from a higher high. So I should be humble in expecting the second arrow. First of all, the bulls are unrelenting. If they take out 601.50, the odds of getting to that second orange arrow are slim. And this drop did not bring me profits because they had burst up higher and they chewed up some time off the clock. Okay, so very important that we stay below 601.40, 601.50 at the worst case scenario. I'm not going to put another line on the chart. We already have too many lines. So this target, this arrow right here, it's like pulling teeth. We've had it all morning. They've given us half, 2/3 of it, but not full of it. All morning at 3 different times. We get the price action. They stop this shy of the target. So whenever they do that, they make it imperative to hold. So now if they go to 601, they'll probably go to 600.6. That's my take. So now they made it a thing. Like, oh, we can't lose this. So if you drop this line right now, I think you finish those targets I spoke about. You have this much downside immediately at risk. Well, they haven't done it yet, but it's a thing now. They keep defending it like it's lava. That will give us both arrows. So how do I treat this put? I bought it. I'd say, you know what? Get me out if it goes to 130. That would bring me 40. That's more than 40%. So pick a number that would get you. If you're happy with 20%, say I will get out at 1.2 and 1.3. If you're saying that's only $20 or $30, but aren't we here to teach you a process that you can repeat, 1 contract or 10 contracts. So figure it out at 1 contract levels, enter and exit with science like I just told you. You're green right now. You have 5% of profits. If you enter the order, you don't even need to chase it. If we drop, you get filled and you're out. You don't have to chase it. The risk there is you leave money on the table. Who cares? If you can make trades that pay 15 to 30% every time and you leave double that on the table, but you have a process. Isn't that the goal? To be able to log in, create income, log out, and go play with the dogs. Kids, if you still like them. I'm like kind of not, no, I'm kidding. Kids or dogs? Okay, so now we have some lower lows, lower highs behaviors. So you saw me look at the green ticks. I didn't freak the F out, right? Okay, because I have a stop in mind. I entered based on science. I didn't just wing it. I felt like it. Okay, we're up 9%, 11%. So there you go. You go from a questionable entry, and I told you it might start from a little bit higher, and it did. So if I got 11% out of nowhere after being red and regretting it, I would exit. Exiting for greenish is way better than and missing out is way better than seeing them go back up and blow my my targets out. I would like to keep it. Okay, I'm okay losing money on this trade a little bit because I am tracing a higher time frame setup. What got me into this is the opportunity to drop below 600.5. That is below both arrows and into the bottom end of that white rectangle. So the next rally, I would like it to stay below 601.20. I'm talking 601.30. I'm talking you through levels that I see important. And if you're new, welcome. This is a 15-second chart. So put a neck brace on, take a Dramamine, and control your emotions. You're going to see ticks that look huge because we're looking at 15 seconds at a time. They just give us more details. We just have more information. Look, they still didn't even give us the whole first brown arrow, orange arrow. They are unrelenting. Microsoft is the first mega cap looking to lose yesterday's low. The best company on the planet is looking to lose, but it's at all-time highs, so that's fine. Damn, that is too big for my liking. 601.40 is okay, but they're like, buy. They cannot have a red tick that is unmatched by gigantic green ticks. This long green tick didn't come on volume, but it is large. It spans the whole battle, and it's attacking the biggest bear on this chart. Can you pinpoint the biggest bear on the chart? Just one candle. I'll give you a minute. This guy. Let's see what they do with it. That was a pretty red candle. Pretty big, backed up by another decent candle. They struggled into it, and then boing, they want to erase it all in one tick. We'll see what happens. So Maria asked, is this a top? I'll tell you in a few minutes. If we come down to 600.9 before we come up to 601.7, then we have changed the behavior a little bit. It doesn't mean that Trump is not going to come out and say something to take us up to 605, but that's a different conversation. Do you guys get the feeling like this market doesn't know how to have some ticks without headlines? It's like they do nothing until the next headline. It's almost like Pilates. You don't work out, you just sit there. Oh, wow. What did he just say? This is an important spot right here, right now. They're attacking that large red candle. And that large red candle also kind of buries two of those large green candles on the left. That's a legit battle right here. Mike, maybe. I don't know. Somebody else used that word before, Pavlovian. I don't know that that's the case. Pavlov is that we anticipate something. No, we have a physical reaction in reaction to a stimulus, an outside stimulus. Maybe. I'm not too sure. Can you please check GE? From what perspective? It's at the stratosphere, it's shortable, all of that. I coined some dinero and thinking of reshorting. Okay. You have my permission. I freaking hate that stock. Not the company, the stock. Good for you, man. Good for you. Did you lock your profits? It's vulnerable to 235. 239 has a fair value gap, maybe. 235. This is target 1, 2, and 3 filled on a 1 hour chart. That's rare. Yeah, 237, 235 doable. Okay, if I did not have a put, I would buy a put in the SPY right now. That's the setup I wanted. Let's see if they let me have a normal start to it. The same setup, rising wedge, targeting 600.5. Actually, it's lower than that, but let's go with 600.5. Okay. Last time I said these words, we went to 601, almost 602. So we'll see if they let me have the setup. The TLT is really wild, really wild. So I'm going to take this arrow from here and repurpose it to tell you what I think should happen here. And I'll give them some space. I'll zoom in so we're not so confused. I'll move this guy over a little bit. This is going to have to stay in our face because that's what we're going to be playing inside. Okay. If you rebought it based on my comment, it was 88 cents. Okay, I'll keep the original price because I said I'll keep it. But if you just bought it, the same put, 601 put for expiration today, it was 88 cents. Again, if you're not very fast in your executions, just when you buy it, you pay 88 cents. I would immediately turn around and open an order to close it. And I would ask for my target. I would say, okay, I'll be happy with 115. So I would say, get me out if it goes to 1.15. And you send the order, it just sits there. It's not worth that much, so it won't fill. And if we get a couple of red ticks, regardless of how fast they are, you're likely to get filled. This way you're not chasing it. The risk there is that if it goes down $2 more, you miss out on that. Like it is now, the original one is back to even. The original one. So the 88 one is up 10% ish, 8 to 11. I'm doing air math here, looking at multiple windows. So forgive me if I misspeak on math. If you're out there, especially on YouTube, if you're on YouTube, you don't know that we have 180 people inside of a room trading, and we have it every day, 160 to 180. And we are free to say whatever we want. And we work together in order to do well, trading fast, trading medium, and trading slow. All right. The 88 cents is now 99. That's 18% win. Lock it, because we're falling into support that has proven as support a couple of times. The original one is greenish, reddish, greenish. So I think I want to stay in it because I see 600.5 or lower as a potential target of a wolf wave. Let's see if it plays out. Anyway, finishing the thought, simplestocks.com, go sign up, see what it's all about yourself. And if we're lying, get out. You can cancel after the first month and never see us again. And you can make fun of us on Twitter every day, although you won't, because you're going to love it and you're going to stay. We're back up to 9 to 10%, even on the original price. So it's 110. You got $20 in profit off of an $88 investment if you entered it the second time around. And look at the violence. Every time we make progress, a lower low and a lower high, look at the violent reactions to the upside. The markets are desperate for green ticks. I don't understand it. It's like they've never seen opportunities before. Do they know that it's fleeting, like it's going to disappear? It's weird. Charles, I was just answering a GE question about somebody who wants to reshort. Can we tell levels for this week? I can tell you levels for today, this week. It hasn't been trading a week. So are you an investor or are you a trader? I do use VWAP, but in different ways. You should mention VWAP anytime you see it. It is very important. When you say what are the levels, are you an investor or are you a trader? Because for the investment part, you need to answer that question yourself from the fundamentals. Do your homework on the company and deem it worthy of your investment. Take a position, leave room to quadruple it over time. Because it might be at 25, it might be 125, I don't know. Right? It's a brand new company. Well, no, it's a brand new stock. The company may not necessarily be brand new. It's a crypto company. The risk on that is that crypto is at all-time high or thereabouts. So if crypto takes a spill, corrects 20%, which it does often, what happens to that stock, right? I don't know how people are going to trade it. So are you trading it or are you investing in it? Who asked? Sean. Wow, nice work, Mike. Then I can log it. It is corroborated. I'm trying to keep a log to say, okay, what have we done today? 25% on puts. That was 20 cents. I'll log it once because I said I'll hold mine. Now, come back down and finish the orange vertical line. That should be your exit, even though it can go 50 cents lower. But it's been a struggle. Every piece of greenery we got on the put side is a struggle. You look at it now, it's a complex head and shoulders. Now you can see the target I'm mentioning from a different perspective. So a pattern is not a trigger, right? But it gives you a measured move, about 70 cents. Yep. So if you look at my screen, everybody knows what a head and shoulder looks like, but this one has multiple shoulders, head, and multiple shoulders getting drawn. If you lose the neckline, you'll come down this much, something like that. That would jive exactly with a wolf wave, which is completely different. This spike triggers a wolf wave, or these 3 or 4 candles. Wolf waves are like pizza slices that are like looking like this, and then they correct like that. That's why the put is attractive to hold, because if I'm right, we go off the screen to the downside. But I'll settle for that orange arrow. The second one. Lord, give me an arrow, please. Actually, they did give us one. Give me a second arrow, please. All right, let's check on the Iron Condor. Anybody bail on the Iron Condors because they paid 60% of 50%, solid 50% of their maximum gains is paid. Solid. Maybe some more for some people. So if somebody wants to get out and avoid the drama and you take out half the winnings, it's $50 out of nowhere. And you only used 400 to make that happen. Okay, so that's 20% reward for doing nothing, for just being here in the morning. Also, the Iron Butterfly from yesterday paid about $50 near the open. I didn't log it, but I did see it. So let's see, $20 here, $50 from the Iron Condor, $50 from the Iron Butterfly. Not one of these bets risked more than $400. And all of these rewards are more than 20%. This is the important line. 601.3 will get you a 601.6 attempt, 0.55. Bears, you're losing. China, US just concluded talks. Well, okay. What language did they speak? Did they have an interpreter? It's important. They spoke dollars, did they? So what did they conclude? What's the takeaway? What's the next step? I thought we were talking to Japan today. I can't keep up with these headlines. Japan is broke. Okay. Was it? Isn't it the third largest economy on the planet? Or am I completely off base here? Let's do a search. Give me the 3 largest economies on the planet. US, China, and Germany. I guess I should have asked top 5. Fourth. I missed it by that much. And they're broke? On the 13th. Well, the spike last night was based on them talking to Japan. That big spike, I was told by the night shift that it was because I said, let me guess, it's the US and China talked and things look good for future actions. That was my guess. I just made up a headline, and somebody said it was close. Night shift on Discord. They trade all night. Oh, okay. So that's the news. So we spike a billion% last night because they're going to talk on the 13th. Awesome. So now we have to look for the 13th, another spike on the same news. Sweet. I told you this market is rigged against against red ticks. It's predisposed to spike on any news. All news is good news for the stock market right now, except for one. Actual can we cuss? No. Actual crap. Like hot steaming crap. Regular crap is okay. Just don't give me crap I wasn't forecasting. Yeah, anyway, so turn off the news if you want to trade properly. Like if somebody told me there's going to be an earthquake in the next 13 days in California, how would I live my life in California? BSX. What? BSX. Boston Scientific alert on my screen? That's weird. A stock I don't trade. Oh. Okay. If you're long BSX, you might lose another $3. That's basically what that alert is. This arrow is still available. You want me to put it on there? I'm going to put it on there. Screw it. Available. I'll make it, I don't know, green. Whatever color that is. It's available. That's the target I see in my head. Within it, there are these little targets, but you can't talk downside if they let them get up to 601.50. Look at that candle at 601.45. That, for all intents and purposes, should be pretty difficult. Oh my gosh, the KRE. I missed it. Wow. I need to see the components of the KRE. KREZ. Huntington Bank shares, East West. So a bunch of smaller ones. Each one is between 2 and 3%. Okay. By design, it couldn't be one company goosing the KRE, but the KRE is goose. So this week, I will either say that is a great thing I had, or I would stop talking about it. The relationship between the KRE and the XLF. Up until now, including today, the KRE has forecasted what the market wants to do because it has forecasted what the XLF has wanting to do. Every time, it's like earlier I said, we're going to that red X, and we did higher because the KRE had just broken out. This one, we were lower. Maybe today I stop talking about it. That'd be great because the fewer tickers I watch, the better. Okay, the puts are still green. So us sitting on puts for that opportunity, for the available opportunity, is gravy. It's worth hunting. It's based on science. It's not like I'm hoping. I see something and it may play out. All right. Now within that, let's look at the components. Google is off the highs. Meta should be rallying, is off the highs. Palantir poked and dropped to yesterday's levels. By no means is it a disaster, but it's off the highs. The TLT complete reversal. That's the puzzle right there. The industrials filled 2 days ago's weaknesses, pop. So they filled gaps from 2 days ago. So that's Boeing and Company, GE, Boeing and Company. That's global growth, folks. Okay. That's global growth right there, XLI. The XLV is off the highs. So they need a new leader, and it has to be NVIDIA. You cannot tell me the stock market is going to take another high while NVIDIA is still in deep crap. Well, it's not, but it's not at an all-time high, and it's the one that is a slam dunk needs to be at 180, 190. It's priced too cheaply compared to what everything else is priced at. If IBM makes an all-time high today, a crap company like IBM and Nvidia cannot even go to the highs when it's growing 70% of a quarter. It's crazy, year over year. The options volatility is because the VIX is lacking steam. That's literally what the options are. The VIX represents the prices of the SPY options. Let's look at the algo flow. It was red just like yesterday. It's less red now. The divergence is gone, the bearish divergence, but it's still red. The algo flow is -4. Earlier, I identified a trade. Somebody with calls rolled their calls from the 13th to the middle of July, and they banked $500,000 in the process. So they cashed in $1.9 million, and they reinvested $1.3 million is what they did. And I'm rounding down. So they stayed long with less money, and they bought themselves a month. Another line, so that has happened more than once this week. There's been $11 million worth of that at that level for September. So pretty 600 is a line that they're fighting over. Whew. We're hardly 2 hours into the day, and I feel like I've been talking for hours. I have been. We've been talking early today, this week. Okay. Options. Downside pressure, about $2 to $3. That hasn't always played out this week, but it's there. More so from the XSP than anything else. Can't bank on it. The SPX doesn't mirror that. The QQQ is stable. The IWM is stable from that perspective. Dollars transacted. The highest put transacted today is the 6,000. That's not very surprising. It's a round number. The highest call transacted is 6020. Yesterday's Iron Butterfly. The highest dollars transacted, I think, is at 6,100. Unless my spreadsheet is wrong. I don't know how that's possible. My spreadsheet must be wrong. Let's go see what YouTube wants. Suki, do a few hours of live on YouTube every day. So if you took the trades we took today, you would pay for your subscription for a whole month. Actually, more than that, if you bought the yearly. So somebody on YouTube said, do a few hours a day on YouTube. Like, okay. I see. Yeah. Well, that's a good talking point. Thanks for doing that. I thought that was you. I was like, wait, what? But anyway, seriously, if somebody is seriously looking to actually find a way to make money other than going to a job from 9 to 5, this is it. And you can't deny results, period. End of story. Oh, by the way, this blue box on the SPY, there's an even clearer box for the NASDAQ. The QQQ last night high was 534.5. and the low was lower than yesterday's, and that would be, I'm eyeballing it like 529 something. Okay, so we took back that green candle. Can we lose the support? Like, can we get down to 601.05? I want to lose these wicks, which just so happen to be this line. There are no coincidences here. Lose this orange line horizontally so you can finish this guy. So you can finish this guy. So you can start this guy before you take out that. Because if you take that out, you're probably going to take that out. And then what? What kind of a statement is that? On the back of who? These guys are not frisky. Okay, these guys have been frisky, but they're not any friskier. Short of a headline that bails the bulls out right now, this green arrow should play out. But hey, hold your breath. Somebody will say something because the White House is trading 1 DTEs. I guarantee it. That's how they cut the budget. Ooh. What? You don't believe it? You believe in coincidences? All these headlines that break out exactly where they need to break out? Come on. I said that to China. All you have to do is just buy puts and then say, we're adding tariffs on the US, sell your puts, buy calls, and then say, okay, we'll talk to the US, sell your calls, buy puts, say, okay, the negotiations have stalled, sell your puts, buy calls, okay, we will talk again, sell your calls, buy puts, and before you know it, you make up all the money you've lost from the tariffs as a country. What? Totally doable. If they're not doing it, they're idiots. It's not illegal. Well, it kind of is, but. Okay, the puts are back to green. That's the second round. The same money is in the puts. So, Mike, if you re-engage your puts, let them run. How many times are they going to headline us out of a freaking target? Just give us one target. There we go. Boom. Target met. We are up 25% even on the original one, and probably 40% on the secondary one. My job is done here today, folks. If it was sunny, I'd be outside right now. It's not. It's gloomy. We are at the word available. The puts are not increasing as fast as they should be, so they're probably going to pop right back to 601. No, this is fun. I wouldn't take a break. This is fun. I was in this chair hours ago. Smoke from LA? No. I'm like 40 minutes away from LA. Whoa, there we go. 45% and 65% and a zillion percent. Enjoy. Okay. Exit. It's up 90%. You just doubled your money on the original one. Target met. Woo-wee. Dang, that's pulling teeth, man. Listen, it wasn't easy. We got challenged. We worked it. Whew. It's hot in here. I think I woke somebody up. And it's live on YouTube. You're welcome. Yeah. Ooh-wee. That's a good one. The pickup. Credit put spread here. I know you have some credit call spreads, and they've been giving you a hard time, so you should balance your book. Yes. All closed, then I would not take a credit put spread. You booked profits, good for you. If you hadn't booked profits, yes, no brainer. But we are in the stratosphere, and this market is not trustworthy. So the highs and the lows of last night have not been met. We've approached the highs, we just approached the lows, but we still have a lot of elasticity. But a credit put spread, if you do have a credit call spread for today, or a bunch of them, then it's okay. So the reason why I say no, because if we come down and go to 599, like round number, which means we lose that wick, the bounce, they will probably go to 598.20, and then you can get a better price for it. So if you don't have a reason to balance a book, then this circle has been here for a couple of days, and look at where we went last night. So maybe that's significant enough. You're welcome. Yeah. So I have a lot of trades that are somewhat not intuitive because it seems like I'm fighting the trend, but I promise you, every trade that I'm taking that is bearish, it's for a reason. Like if I'm short STX, whatever that stock is that we shorted yesterday, I shorted it based on valuation. Palantir based on the price to sales valuation and logic. IBM based on overpriced and misplaced trust. I didn't short NVIDIA, not for a second did it cross my mind. Microsoft, not for a second. Google, just to balance out my long. Amazon, same story, just to balance out my long. I shorted Uber just because of a technical. And I'm shorting the markets because I believe we are expecting perfection on too many levels and it's not going to be there. And even then, I'm leaving room for error. So it seems like I'm fighting the trend, but I'm not. I'm being very picky with where I place my risk. And I share these ideas with you. But sometimes it's hard to hear the message because the method doesn't agree with the narrative that is prevailing. So it's perceived like, hey, this guy is doing the opposite of everything. Yeah. And gold went to red. Gold earlier was super green, went to flattish red. I'm short gold too. And it's working. So don't argue with that. The short on gold is beautiful. And guess what? The VIX couldn't even hold its green. So that flash in the VIX, whatever it was, headline this and headline that, um, the fear, the cost of fear, the representation of concern from the market makers a month out is beyond explanation. I don't know how they can be so comfortable to leave the VIX at 16 and 17 when mathematically the average is almost like 20, 19.6, 19.7. It's weird. Like, what do they know? The DAX, that's 2 days. The DAX closes minus 0.6, and we don't. I believe that was the number yesterday, almost the same, right? 0.59. This time we have witnesses on YouTube to see it. We know we do this stuff. This is a beautiful one because it was so hard, but we were live on YouTube. Wee. Okay, so now what? So I said earlier that's the biggest bear. This was the biggest red tick right there earlier, right? That's a weird arrow, Nick. Jeez. This one right there, that was the biggest arrow. Well, now we have to deal with this one. So let's break it up into its components. How can we do that? We go to 5 seconds. Boom. We just discovered it's two pieces. So 600.4. Can we break it up into 1 second increments? I'll zoom back out. I just want to know where the micro levels are. And TradingView is locked up sometime today. Sometime today. Yes, no, maybe. There you go. You can do it. Ah. Oh my gosh. Well, the laws of diminishing returns. I mean, it better tell me like the lottery number is at this point. We've invested so much time in it. All right, back out. Abort. Good Lord. Okay, so QQQ. Oh my God. Switch windows until the other one wakes up. So we know that there's a seller at 600.4. Where we at? There we go. So we go to SPY now. See, this platform has a problem with the SPY more so than any other ticker. Okay. So the available came to fruition. Now, this candle is this block is what they have to deal with. I can see them coming up to 600.9 and it would still be okay. Let me see if I can get us another extension like the one we just nailed. Lord, okay, I would stay short on rallies. We might be headed to 594 over the next few hours. This is not imminent. Holding a put from here is probably going to um, eat away at the premiums, but there's a chance we're going to 596.5 and 595.5. We might pop to drop. So here's the plan. If we do this, I would get another put for this opportunity on the way to lose this and have that opportunity play out. I'll walk you through it. Yellow. Okay. I still think we are vulnerable for this from somewhere up here. And this is just the start. It's lower than this. Okay, so that's the path for the next few hours, potentially. You have to maintain this resistance area. Okay. So anywhere inside this white, I can buy a put, but you might run out of time. So what you need to do is hold a put and manage its value with regards to time. I don't know if we are able to do it. That drop was pretty strong. Okay. So it may have taken out a bunch of sellers. So dropping through that should be very difficult, which is why I think it may not happen today. So the way I would trade this is a credit call spread, debit put spread. This way, if it doesn't happen, it doesn't cost you anything. But if we want to mark the put now, the same put, the 601 put, is 121. Why? Did the VIX spike? Why is this put so expensive right now? Yeah, I'm not a favor of holding the put for that because the target is on a higher time frame. And if we get, the plan is if we get inside the top end of the white box, I would get bearish. Buying a put is the most direct way. Selling a call spread and buying a put spread is the easier way. It won't pay as much, but it would risk a lot less. So I'm very confident of the downside potential target. I'm not so confident I can make money by holding a put all day for that to happen. If I was short the ES, it's one thing. But holding an asset that dies with time, and the faster today goes by, the faster it dies, is not an ideal way of doing it. So if you buy a put, don't let it deteriorate before you quickly switch. SPY. Oh, credit call spread? Yeah, SPX. Yeah, because if this drops, the SPX is falling too. Let me see if I can give you the visual on SPX territory. Okay. There should be resistance inside this box and higher, of course. Let's see what they do there. And there is support anywhere below 66,013. Yeah, I'm not inclined at buying a put right now. I need more clues. And the target I have is on a very high time frame. Selling a call spread, which I already have, will be one way to do it. Combining it with a put position of sorts, a debit put vertical or a put diagonal. Okay, so now we have a scientific reason to be short, this red W. But what you need to see is a circle that shows up above the word resistance. But you can short right here, right now, at $106. That's more like it. That same put from earlier, it's $106 to open now. So I'll tell you why. And where would you stop out? As long as we're below, the stopping point on this one is 601.60. If you can take a beating from here to 601.60, you can probably see this drop come down to 600.3 to the blue dash line. So that orange squiggle is the target, but a little bit higher. So this is available right now. $106 to buy that put. Is this a 5-second chart? Good Lord. Okay, I need to go back to 15-second charts. That's just too fast. But I want to see this trade through. I don't know. This is a mistake. I'm sorry about that. This needs to be 15. I don't think I've ever traded a 5-second harmonic. So this is our test. If you're new at this, skip this put. If you haven't traded and won today, skip this put. If you're trading with some winnings, okay. I'm shaky on this one for a lot of reasons. You heard my hesitation. I'm confident of the target being lower. I'm not so confident about right now being lower. Look at left. There's a lot of sellers above, so that works. That white box represents that opportunity. The W is scientifically proven to render 600.4, 600.3, but that's a 5-second chart. So, holy moly. And the VIX is at the lows of the day, so that's not good. And the XLV is still too strong for my liking, and the XLI is inside support. The NVIDIA has bounced, made a lower low, but it has bounced. Microsoft lost yesterday's low. I told you it might. Meta, not frisky. Google, still frisky. Apple's okay. Okay, so what happened yesterday to Apple? Tell me, Apollonians. They had a conference of sorts, and it spiked and dropped out of nowhere, which tells me they were expecting some release and it didn't happen. We discussed it. The discussion was around AI or not AI. They're unifying their OSs in nomenclature. They're all called 26 now. They're unifying the looks of your OS. So if you log on to the iPad, iMac, or iPhone, the desktop looks the same. That's pretty tricky to do. They're simplifying the whatever your talking app is, Apple FaceTime. They simplified the camera and they got you back your old look. So all of this is just looks. Where is the meat? This is the neckline that brought us the drop, or that visually represents the cliff from which we fell. If you look left, that's an accident scene. If somebody bought calls at that orange line, wouldn't you think they would get out of their calls up here? That's the spirit behind. Getting here is one thing, getting through here is another thing. But it is so bullish these days that I wouldn't be surprised for them to try to get to 60170, which would means they lost the orange box, this one, and they gave us the target immediately in one tick. So usually I say we trade inside the orange box, and if we breach it to the downside, we go down as much as this, and to the upside, same. They gave it to us in like 2 minutes, which is kind of sad. And the VIX is at the low of the day. The VIX right now is as low as it was at the lowest point of the day. The VIX futures is not only that, it's also lower than yesterday. So yesterday we had that dynamic. And let me tell you why the puts are dangerous here to be in puts. Because yesterday we had that dynamic where the VIX futures had collapsed and lost the day before its level. And the VIX did not. And I said, why? So if the VIX is going to play catch up to its leader, the VIX futures, then we're going to have a spike in the indices. Because usually a giant dip in the VIX, and that would be a big dip to go to below yesterday, which is 16.8. will have opposite ticks that are green in the index. That's my take. And here comes the mega caps because they have been under fire or asleep under the leadership of NVIDIA. So I'm going to put NVIDIA on the bottom right-hand corner on a 1 minute chart. Here it comes. Let's see what they can do with this one. If NVIDIA can clear the hurdle it just lost, it might inspire, say, maybe Microsoft to join it. We'll see. As well, and there they said, CNBC says CPI will not include effects for tariffs until next month. Just passing it along. Okay. You believe in CPI being an accurate metric. That's the funny part, that they believe that. Yeah. They call it data. It isn't. But here's what I'm confused about. So, are the tariffs in? The sequence that I have in my head, the tariffs are in for everybody, especially China. That was like months ago. And then one day we had a huge rally up 4%. And that was because, okay, I'll put everybody's tariffs on hold except for China, right? We had that relief rally. And then they said, okay, so China, nothing, I didn't hear anything about all the rest of the world. China, we're going to put in small tariffs now. And in 90 days, if we don't have a deal, we automatically click up to high tariffs, up to 140% or 120% or something like that. That's the last thing I heard. And then I hear we got another 3% rally or so on the headline that 3 judges legally blocked the White House tariffs. They said they were unconstitutional. The next day, the White House reinstated them by doing whatever legally. And on the 5th, last week, the 3 judges, the plaintiffs, were supposed to file something to redo what they did the first time. And yesterday, the Trump administration should have done the opposite to that. Has any of that happened? Like, where are we? Are we in with tariffs, or did those 3 judges actually stop the tariffs? Very confusing. But for me, it doesn't matter. I told you that in October, November, and December, and February, and January, when everybody was worried about the tariffs. I said in the end, it's not going to matter. Business will find a way. Companies will want to sell their stuff. Countries will want to prosper. They will find a way. It's not going to matter much as to how much money Google's going to make. And if I can say that about 10 stocks in the NASDAQ, then that's more than half the NASDAQ. So for stocks purposes, the tariffs are not going to matter. For you and me eating and living and buying a car, it might matter. But for Wall Street, it's not going to matter yet. Long time effect. Some companies are directly in the line of fire. That will matter. Like if your business is dealing with aluminum and there's tariffs on aluminum and that's your entire business, okay. But mathematically, those are few and far between and they don't drag down the indices. Look at the top 7 companies on the planet. They're probably 60% of the NASDAQ. Yeah, but my point is I lost track. I don't know where we are. And I don't know the market knows. And they're reacting to these tariffs headlines. Like, what if they say, we're taking off the tariff, but the tariffs weren't on, and they react positively. And nobody's regulating that. People are saying whatever they wanted. They'll say sources close to the matter, or they'll cite some ambiguous source, say that there's progress. And they profit. It's easy peasy. And we're left out in the cold. Okay, let's go to 15 seconds. Okay, finally. So now we have to reset it. So the stop on this red W, the target is 600.4, 599.9. The stop is 601.90, 601.80. So I think the stop on any puts you hold now are based on your stomach and your risk appetite and how much pain you're willing to take. I don't think the chart should stop you out. If we break out of that one candle I mentioned earlier, right there, it's disappointing. They're probably going to get to 602 and a half. They're going to try to reach the overnight high, which is up there, that blue thing, this blue thing. That's what they're trying to do. They did not reach the low, not even close. This candle matters. Of course, this one too. So the last seller, 601.5. After that, they get open space to a degree. Whew, I'll be right back. I leave for 3 minutes. That's what you do? 601.8 is the stopping point of that W formation. Tag teaming bulls. Remember, we spoke about that concept? When the XLV rests and the XLF is not gaining any steam, we bring back the mega caps. Yay, let's go. The mega caps up here collectively, those are the 7 largest companies. They fall off a cliff and now they're coming back with a full head of steam. Nothing we haven't seen coming. I told you the VIX has a collapse to do, and there will be green ticks on the S&P. Those are the green ticks, and the VIX has the big red ticks, and it's almost at the lows of yesterday. So finally, the VIX and the futures are trying to organize. Just please, for the love of Pete, can you synchronize already? It used to be every once in a while they go out of sync, and now every day they're out of sync. Every freaking day. It's a complete mess. It represents the world. Messy. There's disagreement as to what's good, what's bad, what's opportunity, what's a threat. I know one thing. It's a cauldron out there. a flashpoint. It doesn't take much to take a great situation to turn it into an unbelievably bad situation. So just be cautious. Hold VIX calls. By the way, they're still not losing money from that perspective. They work better defense than buying puts in the SPY. If you bought puts in the SPY and you have a green day in the market, those puts are dead. Did I foresee I don't know what you mean. Did I foresee? I said the VIX looks like it wants to drop, and if it does, we will get big green ticks. And I did tell you that holding a put is stuff up here. And the put that I'm looking at is a higher time frame, so it may take its sweet time developing. The stopping point is nowhere near here. We can go to the high of the last night, 602.6, and still not make it. It still be okay. So this available is anywhere from here to miles below here. I'll restate it in different terms. If the ES doesn't break out, it should go below 5980. 5972 is what I saw. Because the SPY here does not show the price action from last night. Last night, this was the price action. Okay, this happened. So the SPY is an incomplete picture right now. How many people are trading as if it were? This what happened last night. Huge drop, huge pop on some headline about Japan. Huge drop based on whatever. Somebody said, why are we falling? I said jokingly, the opposite of why we were rallying, maybe? I mean, why would you ask why? And we're looking to manage to break out of it. If we can't break out of it, this should drop back down to the yellow part. Seems like an impossible task. Give me CPI, give me PPI, we'll be up 6% this week. I have no problems with that. I told you that before the week started. So I don't know what you mean by did I foresee that? You want to ask it to me differently? So now if you want to use metrics, the upside potential of this breakout, if confirmed by coming down here and coming back up, is as little as 90 cents or as much as $1.80. $1.80 will definitely meet last night's high. The blue box. God, I wish this platform showed last night's high because you would see all these ticks up here. This happened last night, all of it. Thank you, Jimmy. So this is another rising wedge that points lower. We are buying dips and making higher highs, right? We just made a higher high by a few pennies, technically. We bought the dip and we made a higher high. That's the algo. It happened yesterday too, the algo. So the rules of engagement of machines, very simply stated. If I were to program a machine to trade, the first set of logic would be a loop to say, what are we doing? Are we going sideways? So range-bound trading, are we trading higher? So buying dips to make a higher high, or the opposite? Well, that little tick tells the algo, okay, we're still doing that. Meanwhile, speaking of algo flow, let's go check on that. Still negative, barely, popping into the positive territory. There's no divergence, so there's no clues from it other than that it's better now. So the difference between holding a put and selling a call spread, miles and miles of differences. First of all, selling a call spread is bearish, but you need nothing to happen and you win. Buying a put is bearish, but it's a directional bet that you need a move in your favor and on time to win. The downside of the credit call spread, limited profits. The upside of buying a put, unlimited profits, basically, for as long as you catch a good win. But if I think they're going to test the highs and I think they're going to go lower later, choosing between buying a put and selling a call spread, I would sell a call spread. I would not buy puts with confidence. I told you that. My scenario could take hours to play out. I would rather sell a call spread, use the money to buy a put spread, and be short for free, provided they don't explode higher. So you risk nothing, and you might get paid a little. Not a little, a decent. Anything you got paid from. Okay, so if I sold a call spread and I got $100, I'm making up these numbers, and I bought a put spread and I paid $100, that means I got nothing out of pocket. And let's say this does that, not much. And then I decide a few hours later to sell this for 50. Did I lose 50? I didn't. I paid nothing and I got 50. Yes, this spread lost money, but I didn't pay for it. As long as this doesn't happen, any value I sell this for is profit. It's boring. It's not exciting. You won't say I did a triple because you can't calculate. You can't divide by 0. And the spread can be a diagonal for tomorrow. It can be a vertical for tomorrow. I would not hold anything overnight for the overnight. So if you buy calls for tomorrow and we open up and you make money, you got lucky. If you buy puts and we open down, you got lucky. Unfortunately, people are doing it these days, and because the market is one-sided, they feel like they know what they're doing, and they get confident in places where they shouldn't be. So 601.80, how many times are they going to poke at it and not break through it? It's right there. It'll give you 602.60 like that. So either they're exhausted and they're running out of champions, which is doubtful, or they're lining up some bears to burst one more time. Yeah, so if you guess with calls, chances are on your side better than puts, but it's still a coin flip outcome. For me, it's like Russian roulette. I'm not going to play it. I am not okay with the terminal outcome of my trade. You understand? Let's say somebody said, here's a gun you play Russian roulette with, and it has a 1% chance of going off. I'm not playing because that 1% loss is terminal. I am not playing. Even if it's 0.1%, I am not playing. I'm not an idiot. Like I saw some parkour guys the other day taking some risk that is terminal just for the joy of filming it, like doing a backflip from one ledge to another on top of a building with no net and no ropes. And if you just step off, you're dead. It's not like you're getting hurt. You're dead. You can't even see the ground how high up they were. I did, and I've seen death a few times, so I appreciate life a little bit more than the average person, maybe. Maybe we should have some camps where people get some adversity. Bulls in complete control, book any load of green you can grab. That's a revelation. Much higher highs. Can you quantify? Are you talking about today, 6 weeks from now? Just so I can take your comments. Oh, this week. Okay. Then you should buy calls. And sell that credit put spread to finance your calls. Okay. Perfect. Holding puts is not easy here. If you think we're going much higher and you're out of your calls and you're holding puts, I don't get it. Put your thesis into strategy. It doesn't matter 1, 2, or 3 DTEs. It doesn't matter. What you think we're going higher in 3 days and you buy puts for 3 days out? Where does that make sense? Buy puts shorter term. I remember now. Okay, I'm done talking about this. Now I remember. Okay. No. Anyhow, 601.20 is important. I'll tell you why. If you get the 601.20, not 21 or 22, 20, you would have ticked lower than the largest green candle on our screen right now. This is arguably the largest. I think it's the widest, so it is the largest. Mm-hmm. Okay, so let's talk a little bit slower trades, a little bit slower concept. All right. One thing I would absolutely do with complete confidence, I would say it to anybody I know. Why not own VIX calls if you have stocks? Why not? It's a free hold. I was green, I'm a little red right now. It's like free insurance. It's like Allstate says, you guys are all covered this month for free. Maybe you'll even make a little money. Worst case scenario, you'll pay $50. Why would you not buy insurance? You remember when I told you the market is too bullish to a point where I couldn't convince bullish people to take a bearish trade that is guaranteed not to lose money, not the guarantee to win, guaranteed not to lose money, and they still wouldn't take it. Okay, so that's being bullish beyond being reckless. Like, it's stupid, actually. When you choose not to do it, it's stupid. And we're getting to that point again. So, how about this for an exercise? Close your eyes and think back to early April. What was your mindset on April 6th and 7th? I'm serious about it. See if you can conjure up your feelings and your account. What was it doing on April 6th and 7th? Were you making calls to bring cash into the account? Were you constrained by margin? Were you down 40% in your account? What was the mindset? Think back and see if you can relive those moments, because we have gone the other extreme right now. We went from one extreme to an up crash on the 12th or 9th. I forgot what it was, April 9th, I think. and a couple of mini up crashes along the way. And now we are at all time highs. We are at all time highs, effectively. Ticks away. Some are, some aren't. Um, and put those two things in front of you on a piece of paper and see, can I be somewhere in the middle, please? Okay. So it's one thing to be opportunistic and okay, I see upside and this and that. But I want you to remember what it felt like to be on April 7th, because you don't think we have the same situation as April 7th economically? We do. So, what was the difference? Tariffs. Okay, so if we relieve them, does that mean more upside or less problems, fewer problems? Just that's an internal conversation you have with yourself to see, how are you situated now? Are you one sided? If you are, buy some VIX calls. Just buy the calls. They won't cost you a thing. They cost money, but you can sell them. It's like if you buy an iPhone, you can sell it 6 months from now for like maybe $50 cheaper. It holds its value. These are iPhones. Just buy a couple of iPhones. You can't buy an Android and hold it. Its value goes through the trash. So Android, SPY puts, no bueno. You can't hold those. Apple iPhones, you can. How far out? Every morning, I tell you exactly what to buy. Every morning. All you have to do is read the daily plan. That's all you got to do. And don't buy VIX calls if you don't have assets to protect, because then you would be actively shorting the market. I mean, it's not bad, but it's not great. Sheesh. I'm bringing it down to levels that I don't. I ran out of similes. I mean, what else can I use as an example? It is a no-brainer trade, no-brainer protection trade. Yes, it is a little red right now. It was green 2 days ago. Literally, when the market was green, I was green. Okay, Al. That's funny. Sheesh. I tell you what, don't buy any insurance. Free ball it. Wee. Maybe we'll have fun the second time around, like an April 7th comes around. Oh, wait a minute. I forgot. We put a bottom at the all-time high. Last week, was it? Last week? Maybe, yeah, I think late last week, mid last week. TrendSpider or StockTwits, one of those companies that sends out a blurb every day now. They had a statement like, "Is this a bottom or something?" Um, I don't know how one can talk of a bottom when we are at all-time highs. A bottom of what? The Haynes bottom was at 66. 66. The Haynes bottom. That's a bottom. But last week, to use the word bottom in your headline write-up, that is either stupid or criminal. I said those words earlier. I said the VIX is not in tune with the VIX futures. It wants to come down to the lows of yesterday, and if it does, we have a big green spike on the SPY. Those things happened. And that's what's playing out right now. Whenever they both synchronize and they curl, that's what happened yesterday. We had some red ticks into the close to close off the highs. Maybe we repeat the process today. But a bunch of people are bullish, so I would anticipate them loading up with calls ahead of the CPI number because they believe it's going to be better. Whatever. The TLT is scaring me still. I am uncomfortable how close it is to breaking down from the 85 zone. You guys don't appreciate what it means to the country if the TLT breaks down. It means big changes. I don't know what, but big fundamental changes. I doubt it's for the better. What it could do is raise the amount of money banks can make. If the Fed keeps the overnight lending rate low and our interest rates soar, so the cost of borrowing for you and me would go up, the margin for banks to make money will grow. So shorting banks is difficult in that environment because the Fed is committed. Well, it's bullish in the sense eh, the banks will be incentivized to make more loans. So it may save the economy. But if the cost of borrowing is too high, nobody's going to borrow. They can give us as much, like they can give you a credit card and say you have $3 million limit, but you're going to pay 20% on it. You would say no thanks. I would take 100,000 at 9%. Thank you very much. If so I don't know. I'm not smart enough. I don't think a lot of people are in order to foresee the effects. But I can tell you, borrowing costs will go up a lot, and I don't know what the Fed will do. Does it have to also? Can it keep the rates low and lower, which means banks will make a lot of money, but nobody will borrow. All right, drum roll. Another push at 601.80, which is a number I highlighted earlier. Holy moly, man. This is the number from last night, by the way. The reason why we're stuck here, because if we look left, this is also the fight from last night on the ES. We have more. This is not it. We have more here that you can't see. We had a huge fight right here. Okay, so there's a mountain of things right there. That's why they're hesitating. It's not like they're afraid. Okay, you don't see it, but it's there. There's some scar tissue there. Oh, you mean buying dips and making higher highs, huh? Hmm. So we went from watching one red tick to one green tick. Earlier, I focused on this guy right there. And now I'm focusing on this guy right here. And wouldn't you know it, that this guy, halfway through it, almost engulfs that guy, by the way. So this is the candle we're looking at right now. That's the trade. What do they do with it? And this is the target, folks. The overnight high. That's what they want. It is 9:30. Man, it's only 3 hours into the day, so we have plenty of time to do whatever we want in the afternoon. I don't know why, Steve. I gave you an offer and you haven't taken me up on it. To run them by me? Why is it a shellacking day? We had pretty good day so far. What am I talking? Your comment. You made a comment. Another shellacking day for me? Question mark. I interpret it as you're having a difficult time today. If that's not the case, ignore my comments. Okay. Ragu. Whoa. That's a -1 score. I forget what this white line was. Long-term important pivot. Okay. Long-term, which means it's probably back from February and January because we're in open air that way. The VIX futures still continue to make a lower low, so there's no stabilization in, quote, the fear constellation. Yesterday, the VIX futures didn't stabilize until we hit the prior day lows on the VIX itself. So I called out 16.8 earlier on the VIX. We're almost there. We were at 8 cents or 9 cents away. We'll see if they'll let it get there or not. Can you keep holding with confidence? I don't know. Is this your first trade of the day? If you lack confidence, trim it. And is the percentage down? Your stop loss levels, different people, different portfolios. There's no one right answer. I can tell you that they're buying dips here, trying to reach 602.60, which is the overnight high, and on the SPY. And this is looking perky, wanting to break out. Like all the elements that are playing in right now are playing out exactly how we called them with regards to holding a put. I said, if you're holding a put, if I want to hold a put for this target that I see lower on a higher time frame, in between, there are these things that could be a problem. The VIX, this guy, I nominated this guy, and he's looking to break out. This is an inverse head and shoulders that would bring NVIDIA to be up like 2% today if it actually triggers. It hasn't triggered yet. And so holding, you can answer that. Have you won already today overall? And if you're green overall, then get out of this one so you don't ruin your day, or at least cut it in half. And what is the percentage loss? What is it relationship in relation to what your risk appetite is? Okay. For me, the risk appetite is different time of day. This early in the day, I'm risky. I'm okay. I can see adversity. Later in the day, no adversity. It goes against me, I get out. I can't tell you yes or no. The downside realistic scenario is shaky at best, time-wise. Long term, higher time frame, unless we break out on a headline like tomorrow morning, we should come back down to 595. The morning note said we're either way lower or way higher in mere hours. So by tomorrow, mid-morning, by the open, we are going to be either at 6090 or 5890 or below 5900. That's the way I see it. And there's a coin flip in between. I wouldn't hold those puts overnight, if that's what you're asking me. Okay, so if I have puts and they're losing value, I can decide that, hey, it's a bullish day and I sell puts above them to turn it into a credit put spread, and then sell a credit call spread above it and turn the whole thing into an iron condor. And now you've got no money on the line and you need nothing to happen except for the bell to ring. That's one way to handle a lost put position and try to recover it. So if I sold puts, bought puts down here and they're not working, I'll sell puts here. That might break me even. And if it doesn't, I'll sell a call spread here and I end up with an iron condor. And now all I need them is to stay inside of here. Stop wasting your time looking at the details of the headlines. Calls on what? What were we trading? NVIDIA? NVTS. Let's check it. It went to my target though. 7.6 and 7.9. So the trade path was proper. It dipped where it's supposed to dip. Are you still in the other one, Zscaler? Probably not. It's lost 300. It should be headed to 288 or lower, 282. 40%. How? Okay. Oh, earlier, because from when you mentioned it, it wasn't higher. Okay, so I'll take that off my screen then. Go back to watching the SPY. If I had calls, I would exit my calls here. If I bought calls for today on the SPY, this is a landing zone for the SPY. I would exit calls here if I was holding calls. I don't know what this circle was for. This is the candle we're dealing with right now. If you want to move it to here to give you a visual of where it's at. The VIX is 6 cents away from yesterday's low. I don't know. The VIX is not a price driver. Okay. Wow, the XLV is looking to break out one more time. Are you serial? Holy moly. XLV, Victor, V, the healthcare. That has Pfizer, Lilly, Merck, UNH, Humana. And that breakout would be huge. The VIX is not a leading factor. The VIX is a lagging indicator because it shows you the price of options that we, the people, establish for the S&P a month out. I don't think the loss was exaggerated. They lost 40% of their values when the markets were making all-time highs. That loss was substantial. UNH was in the 600s, now it's in the 200s. Well, we'll see. This is the XLV. In a market that cannot stop rallying, it's trying to hold support. Toothless? I think he demolished them. Okay, so forget UNH. This is all of them. Markets are up here. XLV is down here. I think he had something to do with it. I don't know what you mean. Why? What kind of ETF? For what? Oil? Okay, I'll say it one more time. This is the ES 15-minute chart. If we don't break out soon, we're going to the bottom of the yellow box. Okay. The ES is trying to match what it did last night on a headline. That's my statement, and I'm sticking to it. The breakout is easy, but if we don't do it, we're coming down to the yellow box. So everybody agrees up it is. Let's buy calls. You guys are so confident. You should be owning calls by the millions. Just load up on calls. Since the upside is so easy, just go with calls. It doesn't make sense. Everybody here says they want to buy calls, and as everybody's inputs. Contrarian, okay. How about you short the spike? Do you read my morning notes? I'm waiting for a spike to short. Meanwhile, I'm shorting long term. I'm not holding puts overnight. That's a coin flip. That's Vegas. I am terrible at gambling. Go to Vegas or play online and go to the roulette table and say, I'll take black or red, evens or odds. Is it black or green? Black or red, evens or odds. And lay down whatever money you put in puts, lay it down on the outcome of the ball hitting a even or odd number. Because if anyway, we can't control the number that's coming out of the government, and we can't control how people react to it, although we can kind of guess that they will react positively to almost every situation but one. And you think that gives you an advantage, so you should be in calls if you trade the overnight. For me, I don't do that. I would rather, let's say you make $500 out of that. You guess correctly, you hold the calls, and they make you $500. I feel I can make $500 tomorrow trading the price action after the fact without having to guess. So instead of having 50-50, I would sell 10 credit call spread at 50 cents each to make my 500 with 85% certainty versus 50-50. You understand the difference? It's fun to catch it right, but it's gambling, and that's Vegas fun. I would rather trade the price action knowing after the fact. If I have an advantage, sometimes we do, we can see an advantage. Yeah, you take the trade. But when the outcome is coin flip and substantial, we know we can rally 2% or drop 1.5% or 1% off those headlines. We know we can. We have done it. That's a substantial move. Nothing is going to survive if you get it wrong. If you buy put and we go up, they're dead, and vice versa. So it seems difficult to manage that kind of risk and somewhat reckless. The way to do it is, if you buy calls, buy a put. So if we're up a lot, you're making a lot, and you're giving up some of the put sacrifice. And if we drop a lot, then you get some money back because the put you bought will offset some of your losses. So you'd be hedging your bet. Okay, so who's going to take us higher from here? The XLV? NVIDIA has the energy, but it has been gutless. I called it gutless. Show me what you can do, NVIDIA. The Excel posse have been doing all the work today, and Google. So Microsoft shows no interest, so maybe it surprises us. Apple, forget about it. Meta has been very quiet, and Amazon has overworked itself. Amazon is stretched to the limits. So that leaves us back looking at NVIDIA, which is at the bottom right-hand corner of my screen. So look at the chart on the SPY and look at the chart of NVIDIA. They look very similar right now. What do I say? NVIDIA is the market is NVIDIA. And it's not, it's very true right now. I said something yesterday or this week somewhere on social media. I said, it seems like the market cannot move naturally based on information that is based on like fundamentals or technicals. They are waiting for headlines. They go from one headline to another. And I said the last headline that really made sense and actually changed the game that we should listen to was in May of 2023. That was the last substantial headline that actually changed the game for Wall Street. When NVIDIA said, you know what, there's trillions to be made from AI, and let me show you how. I'm going to start next quarter. And it just created the AI rally, which was tangible. It actually came to fruition. So we need another one of those. Somebody to say, you know what? I think I'm going to make robots, and they're going to make me $5 billion this year. And then you will have a big push in the NASDAQ from that and the S&P. We haven't had one of those headlines since May of 2023. Since then, we're going on feelings. Because the upside potential played out, oddly enough, not in NVIDIA, but in everybody else, but NVIDIA. So maybe the next push higher is NVIDIA going to 180. It will take the S&P to new highs very easily. It's not an NVIDIA market. Yeah, okay. What is it then? I love it. Those comments that come out like that. Let's discuss. Tell me, what is it then? In May of 2023, the S&P was locked. They could not break out. NVIDIA caused it to break out and took it with it. So let's take out NVIDIA. Let's make NVIDIA not participate. You would lose all the NVIDIA-like stocks with it. And if NVIDIA says there's no more money, that's old news. Okay. Okay. Let me rephrase. If NVIDIA goes back to 90, where's the market? The SPY is 560. 550 maybe. There is no scenario where NVIDIA is at 100 and the S&P is broken out. None. But I can say it about a bunch of other tickers. NVIDIA is the market. And nothing has changed since 2023 on the big picture. We still have a slowing economy, GDP slowly grinding lower and lower and lower. And you know what we also have? What's changing to the worse is we have the COVID relief funds are expiring next year. I think we're done with them by the end of next year. So whatever is left, the trillions of dollars that they rained on us from the pandemic relief, the reflation efforts, it's coming out. And they end now. That comes out. It's not gone. It's still there. It's billions of dollars. It's still not those, the spending, the fiscal spending in the economy. They're trickling out. They're still there. They're trickling out. Okay. So the P&Ls is what dictates the stock market levels. What can the P&L produce? Where is the valuation? The SPY double the normal. Microsoft, not super inflated, but not cheap. NVIDIA, definitely not expensive. It could be cheaper, but it doesn't need to be. Google is in transition, so I won't judge it. It's an unbelievable company. Apple, boring. Meta, not expensive, but not cheap. Amazon, expensive. Unless it comes with a new widget, it's expensive. Tesla, unless they sell some stuff that are not cars, it's expensive. So valuations are way up there. We still have a market driven, very highly correlated to NVIDIA, mathematically and in spirit. It is the market, more so than any other company. Because if it super spikes, the market is going with it. If it super drops, the market is going with it. More so than any other one. It has a bigger effect, I think, than Apple because not mathematically, Apple is heavier because it brings down a whole sector with it. So if it drops, SMH, XLK, the QQQ will drop heavily because a lot of those companies are rallying based on the spirit of what it provides. So that's why I hold that opinion. And it's an opinion, of course. And it's an opinion I can back up with data, I guess. Hey, Trend Spider. Hello. Thank you. All right. We're coming up into an HOP level. Right here is a significant level from Fibonacci, but that red box on the left is a visual representation of what happened last night, which is the upper end of that blue box on the right, which is what happened last night. Yeah, well, this is the target from before the open. That and the lower end, they went to the lower end but didn't accomplish it. Now they're going back to the upper end. Let's revisit the credit call spreads. All the credit call spreads from the morning are still okay and winning. Even the 60-50 credit call spread that you could have taken it late, it still works now. If you want some drama, you can take the 60-45 credit call spread and collect about $60 for it. This is shorting without needing a drop. You should know that the top of the blue box is the overnight high. Maybe they're trying to go for it altogether. Later in the day, I will look at the options that are transacting for tomorrow and see if I can get some information from it. The VIX is taking its sweet old time to get to the lows from yesterday. The VIX futures obliterated the lows from yesterday. 16.82 is the low. Maybe it drops to 16.7. We'll see. The XLV just broke out from its own high. NVIDIA's thinking about it, bottom right-hand corner. And the problem with NVIDIA thinking about it is that it gives you a huge boost to the S&P. Even Uber is going back to the middle of the day after collapsing. Okay, I said something last week. I'm going to say it again. We're on the verge of two things. They're going to happen in the next few days. One, a breakout, 5 to 7% in the S&P, which may end up being like 18% in the next few months, which I would vote against, and another correction, small to begin with, until the you-know-what hit the fan, and then a big fallout happens. And I don't think we stop at the lows if that happens. So we have two immediate targets. One, 5 to 7% of upside in the S&P versus another dip, I don't know, 4 to 5%. I'm not going to say any more than this. But if we get that, then we can have another conversation. If we get the 5 to 7% of upside, we can have another conversation. So if you remember in February, the target was, the first target was 609 to 611. I'm going from memory, with the actual target being 622 to 627 SPY. And those targets were left on the table. We fell short. We topped in February, we stopped making higher highs, and we started drifting in March, very orderly, lower lows and lower highs. And then we flushed low in April in a way that hasn't happened often. It was very scary. And the bounce was more impressive than the flush low. Okay, some things happened that have never happened before. And so that is a very significant floor when something happens that has never happened before. So I'll say this. The April floor should be concrete, okay? But God help us if we lose it on a closing basis. Because if a concrete floor is that important to hold in the way they held it, once we lose it, if we lose it, the downside can be very substantial and or may last a long time. So then it would be hard to recover from it. But that's 3 steps away. Right now, it's closer to go back to the highs, which are right there above us, and finish the 622 to 627 job that we left on the table. So it's easier to do the 5 to 7% rally than to do the 4 to 5% dip. But they're both available and they're both imminent. The start of those is imminent. So drum roll if you can hold it a few days. And I would hate that to happen on a headline like CPI or PPI, something that is not a game changer. Like if they're expecting an increase of 0.3 and it comes out 0.2 and they rally 3% on it and they take us into a 7% rally. I mean, that's like, a high-level tennis player losing to somebody who's never played tennis in his life. So that'll be disappointing. But if we spike on news of business or a tax cut that impacts our pockets so we can spend more in the economy, or reversion in the GDP to positive, something tangible that's actually better, then that would be much better. Then we'd be rallying for real reasons as opposed to BS headline reaction and taking off fear. That's another thing. A headline that takes off fear is a relief rally by definition. If you fell because you're scared of tariffs and then you rally because you took out the scary tariffs, okay, but the continuing rally past from where you fell is because of what? Taking off the tariffs doesn't bring incremental goodness. It just takes off one bad thing from happening. So they tend to fade. I'll keep track and I'll see if I can define it, whichever happens, whatever happens. For now, I'm short a few weeks out to a few months out, nowhere near the size I would want to short. I'm long dozens of stocks that are pretty much played out. And I'm short maybe 5 stocks for specific reasons. That's the balance I'm in. On big green days, I have a red portfolio. On moderately green days, I have a mixed portfolio. On big red days, I have a very, very green portfolio. I feel like I'm okay for now. Every day, I share all these thoughts in the morning notes. And every Sunday, I share them in a 5-minute video. Sometimes 5.5 minutes. If you're interested in an update, pick up one of those publications I send your way. I don't like to watch NVIDIA on the 1 minute. Maybe I need to. Okay, so this candle mattered. So let's see NVIDIA get up to 143.25. What's the all-time high on NVIDIA? 150? I don't even know. Okay, let's zoom in. This red W should bring us back down to 601.90, which is not saying much. But they're so close to the overnight high. Are they going to leave it there? 154, thank you. Easy to remember, 155. Whenever I ask a question and I get answers, I really appreciate it. Thank you. So crude oil, somebody said, how do you short crude oil? Well, we discussed crude oil. I said every rally in crude oil is a short. And if it's not, that means we're going to war with someone. And it just came back to life, came back to reality, thank God. So no war today. Crude oil spiked. And so the XLE, did it spike down again with it? Yes. So somebody was shorting the XLE yesterday. Let me know if you need help. This is Chevron Exxon, basically. Those two are holding up well. The XLE has been an easier short. Interesting. Here's the crude oil future. My gosh. Whoa. Devastation. NVIDIA, one candle. Tesla levels for today. Okay. If Tesla doesn't go to 325, which it can, it's probably going to 306 in the next few hours. If Tesla doesn't go to 325, 321 and a half, then 325, which are possible, it goes to 315, 312, and 306. Let me know you heard. Okay. Let me know how it comes out. You and two other people come in and ask me that, but I never hear back the results. Like, just if you do well, let me know. $601.90 target 1, $601.70 target 2 of this little tiny W here that you see on my screen. So they're basically trying to get back into the yellow circle because that's one candle. If you don't know what this circle is, well, loosely interpreted, it's this candle right there. And for those of you who came in late, this happened last night. Yeah, I don't know where you saw yelling. I'm just going to look through your comments. Unless you have a question, then ask it specifically. This, everybody will be happy. This is target 1.5 of that tiny little W, that last one. I anticipate that circle, the yellow marking, should be a support zone. And 602.1 should be resistance. The bulls need to get to 602.3 or higher in order to get to 602.7, which was last night's high. They're buying dips and making higher highs, right? That's a dip. Let's see if they can make a higher high. They're so close to the high of yesterday. But conversely, they came close to the lows of yesterday too, but they didn't finish that either. So maybe they're just saying, hey, okay, we got this. And then tomorrow they'll use that to explode. So here's a scenario. Tomorrow morning, drop or pop. Let's use the upside scenario since everybody's looking up. If we break through, let's assume that we don't break through that blue dotted box today. And by the morning we do, the width of it is the potential upside tomorrow. So mathematically, we can take $3 to $4 from six. So we would be 608 tomorrow. I didn't look at STX at the peak bottom of the day. Okay, the puts from the STX are really green. They're like $150 per contract. I wouldn't fault you to book them if you bought them with me. STX puts Seagate. I bought straight up puts. I did it live here. If you bought one, that's 125 to 150. Depends on if you booked it earlier today, it was lower. Right now, I see 130. Okay, if we get to 601.7, we should get to 601.4. I'll repeat it. If we get to 601.7 SPY, we should get to 601.4, the bottom end of the yellow mark. Ooh. If you sold a credit call spread, folks, to buy a debit put spread on my mentioned earlier, the trade is still doing okay. The thought process is I collect some money and I deploy the cash so I don't have any out-of-pocket expense. As long as we don't explode higher, I risk nothing. And if I decide to close the trade at any point in time and the credit call spreads die in my favor, whatever I recover from the puts or the debit put spread is profit. $60.40. Your delta is 21. I wouldn't exit. But I don't know your portfolio, so blend it into your portfolio comments. In my hand, and if that was my only trade for today, I would stay in it. I would definitely stay in it if I had a credit put spread. That's not the question. Like, is it balanced or not? 602, the white line is a line that marks the only open candle. So anything above the white line here on the way back, there are no open candles. So they don't have a functional reason to go there to finish unfinished business. So let's see if they make a lower low because of that. Maybe they go to 602.10 to trap some bulls if they don't want to do make another higher high. So every dip here today, every dip this week, every dip last week, and every dip the week before last has yielded a higher high. We're looking to see a change in that behavior. That change has not happened yet. Last night, we had a dip on the ES. So we need to be above the blue box in order to make a higher high. And I'm estimating that because the SPY, no, that would be a higher high. IBM just made a higher high. So risk appetite is alive and well when a crap company like IBM makes a higher high. Sorry if you work for it, but on Wall Street, when it comes to P&Ls, it's an underperformer. No one can deny that. All right. I'm going to put myself on mute. Last time I did that, we had exploded higher. So make sure you don't do that today, okay? I don't want to miss it. I said not to do it. You guys suck at following instructions. Do you believe me now that the KRE is a leading indicator to the market? First thing in the morning, it breaks out. The S&P having red ticks. What? Okay, credit call spread time. Let's see. The 60/50 still is like starting point. 60/45 could work. Instead of buying a put, I could sell a call spread. The difference is that the put will produce a lot of profits, potentially, if I'm right. And the credit call spread does not. So you put yourself at risk. There we go. Overnight high just beat on the ES. I said if we don't break out, we should go. Well, this is the effort to break out. One tick above doesn't make a breakout, but it sure is a good start. 6041.25 ES. 6041. That's a little bit higher than yesterday. We did make a higher high on the SPY by a couple of pennies. 3 cents. 3 pennies. So I can delete this box because we've done that already. This happened last night. We were here last night. I know you don't believe me, but I promise you this happened last night. I'll show you in a different platform. I know you did, but a lot of people haven't. So they're thinking this is a breakout. This is meeting last night's breakout. This is Thinkorswim. That's last night. That's right now. And last night, after doing this, we did that, which is lower than any part of yesterday. Today, we came close. We matched yesterday's lows, but we did not dare go that. So now, the algo still working. Dip, higher high. Dip, higher high. Dip, higher high. The algo still works. Let's look at the algo flow right now. It is positive. There's no divergence. It's like a +1. I can't tell. I don't think I can change these digits to look and see better, but it is positive. Okay, and let's see if we can get some gamma pressure. $602 through 600 is where they want to be anywhere below 603. So as long as we're below 603, the bears have some defense. Above 603, 60.35 is the highest. So we have, where are we in the SPX? Okay, 60.35, 60.40 are the two high magnets that are the closest. There's a higher one lower, but there's a, you have to cut through a lot of support. 532 is the highest magnet on the QQQ. So the QQQ are the only ones that are underperforming, even in the gamma. The small caps have not made a higher high. So this move is for the S&P. The NASDAQ has not either. So this move is for the S&P because of the XLV. That's the biggest one that I see. And now a catch-up trade from the XLF. So the XLV is out of control today. Yeah. So XLF is doing better. Green, but doing better off the lows. And XLB at one point was leading, still is. XLE was, but then fell. Oh, now it too recovered. Awesome. How'd that happen? Wow, good job, XLE. Okay, so if somebody wanted to hold puts for tomorrow, this is where they would have bought them. I'm not that guy. What happened to Intel? I haven't looked at Intel in in so long. Up 5%. I don't know. And AMD is strong. XLK maybe. SMH. So Micron up 3%. So SMH stocks, maybe somebody's leaking information about some tariff deals or whatever. Just headline after headline. It's not going to change the fact that it is inside the P&L of Intel. I'm long Intel. I told you I would get long on the dip, and I did. I sold puts and I bought them back. They were pennies. Stupid. They're not going to replace Powell. They already affirmed him. Rip on Powell replacement? The market will fall apart if they replace Powell. Good Lord. Is he an economist? No, I know who that guy is. He's a Treasury Secretary. Who would be a Treasury Secretary? What kind of nonsense is that? They're going to vacate the treasury seat in order to move the treasury guy into the, or is he going to take both? Oh my God. They need an economist in that seat. They don't need a business Wall Street guy person. They need somebody like Yellen, like Greenspan. Okay, you guys know that 1 + 1 must equal 2. Okay, rate cuts. On what planet are we going to be cutting rates at this level here? STX, die, Mo Flicker, die. It's $160 per contract, 17% win. Woo. Pump what? How can you pump more than we're already pumped up? Pump, pump, pump. My God. I almost want to say something I'm going to regret, so I'm not going to say it. But I'll say it nicely, very reasonably and nicely. The level of enthusiasm in this room is once again make me anxious. We are too bullish. The level of expectations for upside and demand for upside and entitlement of upside is going to cause something to break. This is too much. It's over the top. And this is an honest statement because I care about you. All of you. We expect too much perfection. And then when people expect too much, what do? If they don't get too much or not enough, they get pissed off and they throw a fit. No, the ego is gone. I have no ego. Oh, I don't remember seeing that bit. Is it worth looking up? Right, but the comments, you're expecting too much upside. So I don't call you guys on things that you guys get stuck on. Like during the correction in April, I know there was a bunch of accounts that were stuck in calls, but we don't go back and say, okay, what happened to those calls? The momentum trade is tricky. Most people think they're momentum traders and they can't keep up. So as long as they are scalping along the way and trading point A to point B isn't one thing, but when they verbalize the upside expectation and discount all the downside possibilities so emphatically in comments like have been made today, that tells me that they're not practicing what they're saying. Okay. Just a few days ago, I know the room was loaded up with calls overnight, and there was a rug pull overnight. I don't remember what day last week. Not a peep about those calls. Nobody says anything. I know there was a lot of damage. So, to avoid that from happening again, we should not be so enthusiastic, like, so, whoa, let's go. When somebody says maybe up, maybe down, and somebody jumps in and says, no, definitely up, then you should have $1 million in calls and nothing but calls if it's definitely up. The reality is you don't believe it, you just feel it. If you believed it, you'd be loaded up. But luckily, you guys are smarter than this. You feel it. And I'm telling you, control those feelings. Buy the dip and higher highs, correct. $220 calls on Amazon. Okay, now we got something tangible. There we go. Amazon, 1 minute harmonic that's bearish. 5 10 minutes bullish bounce, so you have to weigh the pros and cons. 216.7 might be a challenge on Amazon. 216.7. It's at 216.55. You want to clear that. Until then, you're at risk of going to 16.2. That's like splitting hairs. But to help you trade. Let's see if I can give you any other risks. 3 bearish setups on the 30 seconds, 15 seconds, and 1 minute. The 5 minutes and 10 minutes, they're lower lows, lower highs. So you have to manage it actively. So Amazon is very sensitive to those headlines. Amazon benefits a lot. Well, the stock of Amazon is moving very closely to those headlines. I think Walmart is coming for Amazon full bore. Okay. 216.20 needs to hold at Amazon. If it loses that, it goes to 215.90. Those are 20-cent comments, and your hiccup is at 216.70. So that's your ballpark. 216.70 versus 216.20. That's the immediate lines. You take out 216.20 on the downside, you lose another $30, 30 cents. Sorry. There's a long wick in Amazon for today, down to 214. For tomorrow, for the next couple of days, the lines are 218, 214. Very simple. The breakout is at 218, open air. You lose 214, you're going to lose $2 to $3 easily from there. I would not hold calls here. No, this is where are my lines? This is an end result, folks. This is a target from last night. I don't know how else to say it. I put this here because visually I couldn't represent it on the chart. This here is the target from last night. You can make money on calls. It's just not for me. JP Morgan credit call spread. Interesting. I don't know. Let's double check. Not for me because I'm short Berkshire. It can work. Just make sure you don't capture another earnings report, which should be in early July. So end of June, credit call spread you can. We took out 64. We are at 67 by 3 cents. Yeah, this is a target zone from last night. So it's hard to convince me to buy calls here. Now, buy calls on the dip if you believe in higher high. So the dip buyers are in full force, right? So they're buying dips and going a higher high. I see a potential of going to 601.20 before they go to a higher high. That one candle, big greenie over there, that circle, the whole thing should be support. So if you're buying calls here, yeah, but just make sure that you might need to take a 50-cent beating before you start making money. If you're okay with that, then buy a call. Now, earlier, no. Now, yes, if you're trading fast. If you're buying a call for tomorrow, that's on you. So Amazon lost 16.20 or is losing it and trying to recover it. So now 216.50 is important on Amazon. Otherwise, it goes to 216 and 215.9. Those are super, super fast comments to help somebody trade the calls they're holding. That's it. I'm not telling you short it or go long it. I'm just giving you levels that look pretty good. Okay. I'm going to see if there's a put I can sell for SDX. It's making me $175 per contract. It should be making you that. That's almost 20%. That's a beautiful catch. Did I write it up yesterday? I didn't, did I? I did it? I did? I sent it out? Somebody asked me why did I short it, so I guess I did. Okay, awesome, awesome. Thank God. Sometimes I only say it here and I don't send it to Benzinga. Interesting statement. Overnight, Tim Melvin followed me on Twitter from Benzinga. That's interesting. So now they drew half of a head and shoulders, right? Well, 2/3 of a head and shoulder. If they bounce here, they better go higher, or if they bounce and lose the bounce zone, they will come down to that 601.20 I told you about. So why is Tim Melvin following me? Yeah, but he's not they. I don't think he works for them. He works with them. He's been there for a while at least. He's like me, been there for a long time. He does not love me. Not unless he has a crush on me. Aw. In that case, I don't blame him. Jesus, what's not to love? I'm so freaking sweet. No, I had one interaction with this guy, just one, and it wasn't very pleasant. I turned out to be right, but I didn't go back and say, I told you so. It was when, I forgot, before we broke out, during the pandemic, I forgot what year it was. We had one of those meetings where everybody's in a square and on Zoom. I think we had myself, Tim, Neil, God, what's his name? I always forget his name. Anyway, Matt Maley and Chris Capri. What's her name? You know who it is. And some dude I didn't recognize, so I'm assuming he was Benzinga CEO at the time. Anne Marie, I don't know who that is. And two more people that I didn't recognize. I don't remember now. And they were talking about upside and downside. And they said, let's start by going around the room. The meeting was like an operational meeting, but they said, let's start by saying, what do we think the market's going to do? And this is going to shock you. So somebody said, the four amigos, Chris, Matt, the three amigos, and Anne Marie said, oh, we're bearish. There's no way we're going to go down. Anne Marie actually said, I like Anne Marie, but I have nothing against her. She actually said, I'm shorting the shit out of this. And when it came to me, I said, I think we would make new highs by February. And we did, but not by February. It was like 2 months after February. But I got a lot of heat for saying it. I remember his reaction was less than pleasant. I don't remember his exact words, but he doesn't. He made me feel like he was not appreciative of me being there. So anyway, that's my only interaction with him. I did read some of his posts. He does put some thought into what he writes. I give him that. His write-ups are deep. So he old school type. I like that. Conviction is good. So he's there for a long time. So I'm going to assume he knows what he's doing, and he's had a reasonable good success. I'm just curious why you followed me on Twitter. All right, so the bounce needs to go to 602.20 and 30 and 40. That's what the green M says. So the opposite of the red W's. But now you see the head and shoulders that they just drew, right? They just drew a right shoulder. So if we get to 601.70, they trigger potentially a drop to 601.20, which is what I said earlier. So buy the dip higher high is the question, or buy the dip from a lower part and higher high. What just happened is what happened yesterday that caused the market to not close at its highs, or coincided with the not closing at its highs, which is the synchronization of the VIX and the VIX futures. Finally, the VIX went to the lows of yesterday, and they are now both curled up at the same time. So that hasn't happened all day. They're both in sync. That happened once today when we spiked in the VIX, whatever happened, the large red tick. So that's not good news for the VIX, except that that's a small change in the behavior of the fear constellation. Okay. So technically speaking, right now, for point A to point B, assume a new high unless they lose this orange line. And if they lose the orange line, the downside is tangible. And the first part of the downside is this guy. And I'm afraid to put the second part because by the time I'm done talking, we would already be at a higher high by this time. So these are potential downsides, provided they don't take out the sellers that are here. So actually, this you can extend down to there. Okay, so that's the setup. We have sellers in the box, a must-hold line, the consequences of which are 601.20 or a little bit lower. And that can still be the dip that they buy to get to 603.5. Okay? All right. So that's the setup here. Not bearish, just price action from point A to point B. Amazon is doing the same thing right now, except Amazon lost its orange line right now. You see that orange line? If I drew one for Amazon, they just triggered it. And it needs to go back to 216.5 now to avoid that. It can. It just needs to bounce to 216.5. Oh, super fast. That's funny. I just saw that. Okay, so today we've had quite a frank conversation. We debated the pros and cons, and nobody fought with anybody. We touched on some touchy subjects, and I told you how I feel about the overall enthusiasm in the room, and I think you guys took it with the right mindset. That's a win for us. Fist bump. Love that. Oh, and by the way, I just remembered we have an audience on YouTube. Whoops. Sorry, YouTube. I just read your comments. It's been a while. Terry, could you look at net for a possible long-term debit put spread trade? Okay, so Terry, are you still here? Let me know. AK, message retracted. What was your question, AK? CPI tomorrow morning, PPI the day after tomorrow, and of course the ever-present threat of a headline from whatever comes out of the White House. And I guess fighter helicopters hovering over LA is not a big deal. But apparently there's some weapons-capable helicopters flying over there, at least one. That's pretty freaky, to be honest. Terry, AVGO, question mark. What? Verbalize it, please, Neve. AVGO, question mark, what? Time frame, long, short, what? Ask me a question. AVGO, I like the company. I bought the dip. I will buy the next dip. There's nothing cheap at these levels to invest in. Trading, yes. So give me your time frame. We'll talk about AVGO. Okay, mini lesson on Head and Shoulders. By the way, I still have room in LA. If you want, ooh, wait a minute. LA. At least we're not downtown. This is a Head and Shoulders. Okay, so it is not a reason to short a stock, but is a way to measure the opportunity to the downside if indeed it does cross a line. So I might make this into a video. I'm going to make it large and hot pink. Oh, that doesn't look good. And border white. Okay. So the white triangles, all three of them, I don't know why this is snapping to grid here. Okay. Says if we lose the bottom end, the base of these white triangles, technically we can tell that they're going to go down the path of these orange lines. If you want to be a stickler about it, you would take the top to the bottom and you would extend that down from the neckline. So that is a typical Head and Shoulders. Look at that. I eyeballed it nearly perfectly. So with that, there is support inside this yellow squiggly. The yellow squiggly is a highly technical term only known to us. So this one here is support along the way. It's support, but I couldn't go down to the word. So we will borrow the resistance and put support. So now this is the makeup of a Head and Shoulders. Lesson over. This is a real life scenario of a Head and Shoulders. Look at it without the lines. Picture the triangles, the white triangles. Look at it with the lines, without. It's like an eye exam. You like 1 or 2? 1 or 2? Okay. So now they're going to try to get back up to 601.90 to try to recover the dotted white line. That's the triangle we're talking about. If you don't see it, I'll change the line colors so you can see it one more time. We'll go with blue. See it? Okay. The path would be blue. I know some guy is gonna, if I post it on social media, somebody's gonna say, bro has all the indicators. Can't you find price on your own? Yeah, bro has no indicators. Everything here is drawn by hand. Maybe there are 2 indicators on here. So for you, friend who comes at me in the comment section, I'm coming at you first. Every time I post something like this, I'll get that comment. Bro, wow, funny. Hilarious. So I'll troll the trolls. 601.50 would confirm the breakdown from the blue triangles, which is called Head and Shoulders. You can see why it's called that. You got 2 shoulders and a head in the middle. It doesn't matter what it's called. The dotted line is what matters. You fight for a zone, you lose the zone, you need to recover the zone, otherwise you're going to overshoot to the downside. Yes, eyes are the best indicators. Terry Barnhart. I'm calling you out, Terry. You had a question. I didn't see it until now. Let me know you're still there. Shorting net is not an obvious thing. I think if net's falling, the market is falling. So unless you see a specific reason why you want to short net, let me see if I can find you one. I would caution you against it. Let's check on it. Okay, it's doable. So your thesis would be it's going into a prior fail. That's the bullish thesis too, because somebody that got in it, they want it to break out. But when a stock goes into a prior fail, I'm speaking to a stock that's not on my screen, it tends to drop a little bit. So if you're shorting it for that opportunity, you have my permission, but what you need to do is put a stop. And the way you're shorting it is pretty reasonable, so I'm okay. I bless that opportunity. But you should know, that it's a frisky stock and a frisky market with decent fundamentals. So you have to be very good with your stops. That is correct. Harry speaks the truth. The truth is that the best indicator we have are the eyeballs inside of our head. All we have to do is look left and trade right. JP Morgan heading to 270. I don't even know where it's at. 268.3 first. So small dip first, maybe. Let's see. JP Morgan. Oh yeah, short-term comments. 60. 1 day. Where are you at, JP Morgan, compared to your highs? What is this? Okay. I'm not short JP Morgan. I'm short Berkshire. So if it does go up to 280-ish or the high, I do have an alert or two here. Let me put one. I may swap out of Berkshire, which has one, into it. We'll see. I don't want to short both. They're the number one and number two components of the XLF. So on this breakdown, to continue the lesson of the Head and Shoulders, students, if we lose this guy right there, we confirm the breakdown. And to finish the thought, we're going to do a 2-day class on charting, and you've seen how well we do here. So if you're not convinced that you can learn something in 2 days, I will guarantee you will have an aha moment that will change your charting life forever. And if you want to make investing or trading your main hustle or a good size hustle, you need to invest money and time into learning. In this case, the money is minimal, the time is the hiccup. So if you can rip yourself up away from your family for 2 days at the end of June, go to simplestocks.com. We have a page for in-person events. We have 2 events coming. End of this month, LAX. You don't even need to go to LA. You land in the airport, 3-minute Uber ride or free shuttle to the hotel. You stay there, you get back on the airport. In the airport, you're gone. And Friday, Saturday. End of July, Fort Lauderdale. Although that class is options. You need both. You need both. Drum roll. So the fact that they're back into that yellow spaceship looking thing, this came from one candle back here, this one. They're in the middle of it. They should find support. They have found support. If they come to this red line, they do have support, but they would have confirmed the selling of the rallies. So rally sold, rally sold, rally sold, rally sold, rally sold, rally sold. That's the thing that's going on. They're selling rallies. They made a lower low, technically speaking. Am I taking you to Universal Studios? No. You can go to Universal Studios. Thanks, Nick. Took my put position up at 602. All right, Brian. Nice. I haven't been to Universal Studios in a long time. I heard they made some big changes recently. It's pretty cool. 602.5. That's, you can't time it any better than that. There we go. So the head and shoulder lesson continues. The target is the long blue line. Focus on the long blue line. The breakdown was the dotted blue line. The support zone is this yellow thing here for reasons that you don't need to know about. This other orange setup is saying the same thing, only the way I put it. I have advanced skills in charting, so I can draw my own head and shoulder lines differently. I don't have to line it up for people to see it. The only reason I did it in blue is because I'll cut this video out and post it on social media to have some jack make fun of me. Yes, I'm okay with that. Keep runners. I'm showing you the targets and the support zones. If you have a win and you want to book some profits, how much profits do you have? It's up to you. You told me you have a bear call spread, so that's working for you at 45, right? 6045. That should be winning. 6045. Yes, all of the credit call spreads from today worked. The credit put spread worked. The downside pressure is alleviated except for $1, so we can fall another $1 and not damage too many things. Okay, algo flow is diverging and bullish, like the stock price is falling and algo flow is going up and it's positive. So we'll see if they flip up. The highest magnet is 532 on the QQQ. That's where we are. So there's no information from that. SPX, that's where the mess. We are at 6025. Okay, so we have giant magnets at 60, 35, and 40, and 60, 20. They're huge, all three of them. So you have two big ones up there, one big one right here. So that's the push-pull. The bulls are looking like they have a statistical advantage that way. 602, giant magnet on the SPY. Those are gamma magnets. So they want to buy the dip. I can assure you they will try to buy the dip. Can they go up to 601.90 right now? If they do, then very impressive. Very impressive. So let's look at the ingredients. This is 30% of that, the top right-hand corner. If I slice this video, you won't see that. So they had a tizzy, and that's right below us. So we fell into support. That's probably NVIDIA. Because it was a little frisky. Yeah, it is. So there we go. And these guys are still super strong off the highs, but they're super strong. So we have the XLV leading that. The XLF, a little better than before, but not breaking out. The XLB has the potential to break out like the XLV. So we have a stalemate there. So I think I'm going to put the XLB down here on a 1 minute basis to see what they can do. XLE maybe as well? No. I'm trying to see what XLY, XLK. Nope. So XLB. We know the XLV is in breakout mode. If you want to see it, this is what it looks like. We're trying to see if this guy wants to break out with it. Otherwise, they should come down and finish this job. That's difficult today. The bulls are out in full force. For us to get these downside targets 2 times in one day, that's amazing. The VIX is off the lows, which helps the concept of lower lows to happen. If I had bought calls at the red line, did you notice how they bounced off of the support line that I put there by hand? It's not a coincidence. That's why you spend time learning this stuff. Wouldn't that be great? Like if you were trading fast and you bought a call here and you exited here because that's the neckline, you just made money and paid for half your trip. Not quite, but you paid part of your trip. You paid for your monthly subscription here. All right, 601.40 is the place where the bulls must hold. Otherwise, they come down to the first orange leg. This is my target. Like when I look at Head and Shoulders and things like that, I give it the Nick target and the official target. So the official target is down here. My target is down here. I got kicked out of my own room. That happens all the time. Once a day, because we're here longer. I'm here longer than 6 hours. Every 6 hours, you'll be kicked out. They have a time limit on this platform. I'm not sure why. Again, if you're on YouTube, welcome. And if you don't know us, welcome. Whoopsies. What we do is we do have a room, a private room, where we meet with 180 people. Right now, I'm looking at 180. Hi, Aaron and Carrie. I just saw you there. And we trade all day like this. This morning, we nailed a big reversal, and some people got into calls in multiple tickers and some puts in other tickers, and iron condors that played out, credit call spread several times that played out. Um, what else? Iron butterfly last night. Maybe we'll repeat it today. I'm not so sure. I need data. Yesterday I had data. We took a trade. It paid. Ooh! Yes! STX. Yes. That's a trade from yesterday. By the way, that trade would have paid for halfway to 3 months, 2.5 months of membership in this room. Just one contract of that trade. Sweet. I'm going to let that bugger ride. Yes, they bounced right at the line and they're struggling to get back into the blue line. If I extend this blue line, how can I extend it? By making it miss. There you go. That's the neckline. Okay, so it's not surgically to the penny accurate, but it's a zone. You can say the orange line to the dotted blue line to the green line to the blue line, that whole zone that they're going back into. 601.80, the top of this yellow thingy. That's the battle. They're fighting over this candle right there. Look at it. Watch me draw a box around this candle and I'll extend it. Look, I drew a box on this candle and I'm going to take out the color and I'll extend it. They are right in the middle of it. That candle right there. That's what they're fighting over. Yes. Okay, yeah. Yeah. I didn't share it earlier. I wanted to get clean breach idea from YouTube. So now we have a higher low, tiny, 601.40, 601.50. If they get to 601.80, that would constitute a tiny higher high, tiny. But it's a micro change in behavior. This is a 15-second chart. So you can't say, oh, this is it, that's a bottom. You're looking for a change in behavior. Now, we have had a descending channel for the last, I don't know, few minutes. Lower lows, lower highs. You're looking to bottom, and the bottom starts with stabilization sideways, okay? You don't assume a bottom without seeing stabilization first. Case in point, there is a... Come on, give me a lower low. Do it. Do it. Do it. Pennies, like a couple cents, just couple cents, so I can finish my sentence. Lower low. So technically, they just made a tinier lower low than this guy. Tiny. So they should be able to finish this orange thing, which I drew earlier, and look how well they're behaving themselves right on top of it. Oh, thanks, Jack. Yes, Fort Lauderdale class. I guarantee you it's going to be banging. Like we're going to bring drums and maybe the Florida people will come visit, even if they're not attending. Fort Lauderdale. We've never done Fort Lauderdale. We've done Palm Beach, West Palm Beach, and we've done Orlando. We've done Hollywood Beach. Thank you, Neve. Thank you for supporting us. Kind of, maybe not. Interact with me here with the comments. Go back and forth. Do whatever you do with the super stickers or whatever they are. If they're free, go ahead and do them. I don't need the money, but just let the algos think that know what's going on here. Too bad I can't send the emails to the 7,000 subscribers that we have on YouTube. You'd think YouTube would let us reach out to them maybe 3 times a year. I don't think that's abuse. Is it on the site? I have a house in Key West. What is on the site? The location? Yes. Click on that link. You'll get all the information. It is options. I will change your life. Maybe. Most likely on options. So we cover the basics of options and what are the important elements of options and the main spreads that we use to make money here in the live and put you on the right track to learn whatever else you want. We will cover how to manage those. And then most importantly, we'll cover what we call the secret sauce, which is how to look at options from a seller's perspective. How do market makers think of options? We don't want to be consumers of options. They say, boom, target met. They say most options lose, right? So why you want to buy them? Look at that. Imperfect. Imperfect. Bam. That's twice today. We walk it up and down. Okay, so we got our target and then some. The head and shoulders, overpaid. So now we have to look left, and it's been a minute since then. Earlier today. So anybody with puts, you want to log it, get out. You're done with the... Whoa, look at the VIX. What the... Get the... What? So the VIX obliterates all of yesterday's in one tick, but not the VIX futures. Why are they not in sync? That is freaking bizarre. Holy crap. YouTube, go tell people to come trade in groups. This trading alone business sucks. Don't ever trade alone. Yes, this VIX candle is serious business. Hunker down. Hunker down. Don't buy that dip. This VIX candle is serious. It goes a full dollar. You rarely see that without an event. This is not about headlines from tariffs. Something else is in there. I don't know what, but whatever. Yeah, this is weird. So this is where I'm going to ask you to go read the headlines, but not about business, like safety headlines. Has there been a physical skirmish? Like not business related? Oil is not spiking, so it's not international. Has there been something in the US? Or is this tick empty? Let me zoom in. Let me pull it up here. It is not empty. Holy crap. Oh, it is empty. Yeah, they went back down to here. What the fudge? Never mind. So they went and dropped. So is that a preview? Now, boss? No, you idiot. I told you after hours, you dummy. You're fired. It's a different department that handles the spikes in the VIX than the VIX futures. The guy on the VIX futures, I told you not now. I need to move this. It's like bang on. Okay, so this box. There's one here as well. There are sellers hiding in this yellow box. All right. So I told you that $5.99, whatever was available, that arrow down that says available down to here, that stuff is available. That comment was earlier today based on a much higher time frame. Let me go visit to see if it's still available. Okay, that was not based on the fast trades. It is still available. And the breakout today was a little bit higher than ideal, but it doesn't negate it. Now we have had, for the bullish, to say that it's not going to be easy. We have had 3 long wicks below us. Wicks are solid supports. I'll give you the values and write them down. This one right there, 600, a little over 600.1. That is alert number 1. The one before it is 599.1, almost $1 lower. Also alert. That one is a little bit more serious. But then you come into the stronger one, which would be 598.7-ish. So remember 598.5, 599.5, 598.5. That was the resistance last week. 602.5, that was the target last week. Okay, so repeat those numbers. We hit 602.5 today. We're coming down, and I'm telling you 598.5 is important. You see what's going on? We broke out from resistance. We're coming down into resistance to establish it as support to see if they want to break back out to 605 tomorrow. That's what's going on. So losing 598.5 will take you towards my target, which is below 595. So now you set yourself back to last week's battles. Not the end of the world, but you want to stay above 598.5. 600, 599, 598.5. Say it after me. 600, blah, 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 blah. Yeah. Whew. Dang. Whew. So I'm going to publish this video today. That's a perfect lesson on Head and Shoulders, just to say the least. Not to mention how a breakdown happens. The same thing could have happened on a breakout. If these were opposite, if we were bullish, there would have been the same conversation. Same thing. How we tried to recover the neckline, the orange test right there, and it couldn't happen. Then we finished my target and then overshot their target. Whew. And look left. This was the target they left on the table earlier. Look. Wow. And the resistance back then, check this out. This was resistance. Look, it's the box that I just made. I just made it out of scratch, the yellow box. That's the box we dealt with earlier. So what did I just say about 598.5? I said, you don't want to lose it, right? Okay. So this morning, we dealt with resistance, the white box. We broke out above it. They needed to hold it. They sliced right through it, and now they need to recover it in that yellow box. I drew the yellow box, not remembering the white box back there. But look how closely related they are. That's crazy stuff. That is some wizardry right there. I love it when the math works out. So now we're looking at sellers potentially at 601.20. That's where there's going to be a resistance, 601.20. And 601.30. Of course, the orange line would also be resistance, everything above that. But the first set of sellers are there. I'm looking at Bookmap. There's no clues from Bookmap. I do have pink bars on the gamma pressure. Let's look at what Traditix tells me. The SPX 6020 is the highest magnet, second highest 6,000. Where are we? We are at 60. We're right there between the two. The Qs, 532 is still the beacon. The SPY 602 is the largest by far. Still large, second largest, 601 and 600. 3 major setups. So it's not going to be easy to fall from here. Algo flow, negative again. It just ticked below the 0 line. There's no divergence. What a technical day. Whoo-wee. I love it. Wow. I love it because of how we built a whole lesson around it. So now, can you recover the yellow box? And remember the numbers I told you, 600.1, 599.1, or 599 flat, and 598.5. The goal is to stay above 598.5, the bulls, this week. That was the resistance last week. Why? 602 was the target. 602.5 was the target. So we hit the target today from last week. You don't want to lose the support from last week, which was the resistance last week, 98.5. Whew. Okay, I'm afraid to go get water. Twice I go get water and I come back to a super spike. Can somebody tell me why the VIX went up $1 and then reverted lower, other than Igor pushed the button too soon? I'm dying of thirst. It's like 100 degrees in this office. Ooh, suffer. How about I sneak out without telling anybody? Maybe that'll work. I am not going to get water. No, I am right here. Look at that. I left and came back. Nobody knew. So I make an Igor joke every once in a while. It's from these flash candles that come out of nowhere. Like out of nowhere, this red candle coincides with this spike in the VIX, but I don't see it in the VIX futures. Okay. So what I say is sometimes the market makers flash their intentions. Maybe we're going to creep all the way up to 18 in the next few hours. And the plot of Igor is some mad scientist with a guy helping him. His name is Igor. Is it coming to you? Okay. So we did a lesson. I'm going to push that video out today. I promise you. And I'm going to hopefully build a mini lesson about Head and Shoulders to intrigue people. Someone loaded up on Nike puts. Let me reword. Today, let's go find out. Okay. Let's go see if I can get you some more information about that. Are you talking January 2026? Or what? When? So I can focus. Because I see $6 million at $60 Nike for January 2026 this week. So that includes yesterday. Let's see here. January 2026. What are they doing? $6 million at 60. Okay, so 12,000 calls are at 60, which probably came in yesterday. And 6,000 calls today. That looks like somebody rolling their things. Okay, so you're saying today. For what contract? 718. Somebody loaded up on Nike puts. I assume for the line of 60. Okay. They are deemed bought puts. Deemed bought. They also sold a bunch of calls at 62.5. So that's somebody bearish Nike with somebody else's money. So they sold calls to buy puts. So somebody's taking a bearish position in Nike. Now, there's somebody that took the opposite of that position. So this is where you don't know if the seller of the put is positive that this is a good value for Nike. So what I would say is don't hold calls in Nike. But I wouldn't get out of my Nike shares because of that. I would sell covered calls. I would be in line with that behavior. All right, YouTube, time to cut you loose. What do you say? You're welcome. AK, you just showed up. You were here earlier. I see you retracted a message. What did it say? You what do you want? How much? Let me tell you this. If you joined yesterday, you would have paid for a whole year of subscription. Just the credit call spread and the credit put spread, nothing fancy. You would have paid for a full month and a half. Larry, thank you, buddy. You don't think there's enough value? You still want a discount above it? I'm not so sure you have the right mindset. I'm going to challenge you to think about it. How about you sign up for a month and then cancel if you don't like it? I'm speaking to someone on YouTube. Oh, nasty, Dave. Woo. Somebody said I should charge you double for saying that. I'm not kidding. They said that. Can Oracle break out? Yes, it's on the verge, but I would short it if it does. Doesn't it have earnings also soon? Yeah, I don't think there's a need for a discount. If you don't see value in this, then you being in the room is not going to convince you that there is value. I give you 10 hours of my day every day, plus a couple of hours of off hours homework. Why do you need it? No, not going to happen. My time is not valuable. My efforts are not yielding results. The people in here that are busting their butts to share their trades and discuss future trades and lessons, I think it's well worth it. You don't need a discount. I'm showing it to you for free here so you can see what's inside. Having $50 off or $40 off is not it's not going to change your mind. Yeah, no, that's okay. Maybe one day you'll see the value without having to save $40. AMD pulled back to 117. On a daily, do you like it long? So I went long, Harry, when during the correction. I sold naked puts on it, and now I'm short calls at some point. You're saying that if it falls back to 117, let me double check. I think if it falls to 117, it's in technical trouble. There's a good base. Wait, how long of a trade is it? Are you investing or swing trading? What's your goal? Swing by the end of July. Buy the dip because they're looking to get to 132. I would buy the dip into 122. I don't think if you hold for 117, that trade is broken. 117 might be aggressive. That candle right there. So 120 plus or minus $1 looks pretty solid. I don't know if you're going to get 117. And if you do get 117, I think that breakout is broken. How about this? If you believe in the upside scenario in the market, then AMD should be able to finish this breakout. So you sell a put spread, so you're not chasing calls, and you buy an in the money or at the money, or buy a call spread that's slightly in the money. So the call you buy is in the money and the one you sell is outside. So this way, the call you bought is an asset that holds well, and the one you sold, if they stall, it dies faster than the one you bought. This way, you're not chasing. And you get to use your 117 level. Now, you don't have to wait. $600.8, 600.6, these two lines, I did not draw these lines. Those are automatic Fibonacci lines from the Harmonic software. But those are lines of contention for the last, 20 minutes. So they should act as support. Therefore, if we, for whatever reason, fall below them and lose this guy right there, 600.6, we will probably challenge the middle of that blue box. In case you came in late, this blue box is the range that they traded last night. If you weren't watching, we went bonkers last night. We spiked out of nowhere to this level, and then we dropped to way lower level that was off the screen. And this here is the middle of that box, middle of that range. And it was minutes. It wasn't that long in between them. So we went to the top of that box, but we could not come as close to the bottom of the box today, which is here. We came close. We came to 599.2. We left this much. Okay. But my thesis is that on a 15-minute and a 30-minute chart, headlines aside, I say that because that's important. Headlines aside, we should come back down and finish that box and then some. Unfortunately, I don't think we can do it today without intervention. And if we don't do it today, we're going to have intervention tomorrow morning. I don't have confidence in buying puts here because we have higher lows, lower highs, and for the last 3 weeks, every time we had a stall, the bulls get the benefit of the doubt. Somebody somewhere says something to bring us another push higher. So let's revisit the price drivers today. These guys are neutral. Okay, I told you it's all about NVIDIA, and NVIDIA decided not to break out, so they went back to the middle. These guys are well off the highs, and the only really contributing factor there that I see is the XLV. And that's a one-man, that is unbelievable what they've done, the XL posse, with only one really big ETF that's contributing that big time. And now the XLF needs to hold. If you want to buy a put inside this yellow box, you have my permission, but you should know that there's a strong buyer. So how low, how much profits are you going to make? I would argue it's easier to get to 601.40 than it is to 600.4. So in this environment, it looks easier to do this than that. And that's what you're asking. You want to buy a put. Get a reason to buy a put. Let me find you one. Nothing obvious. So I personally would not buy a put for this battle here. I would sell a call spread, like I said earlier, and buy a put spread for the week in order to trade that other comment that I think we're going to go down to here. And this way I wouldn't put money out of pocket. So area of interest, what is that? It's an area that needs to fill. This candle was pretty fast, and they might want to retrace it. And once they get to the top of it, it might become resistance. Now, I don't think that's going to happen because, like, resistance-wise, look at this piece of crap. That's the VIX. That's twice today. Spikes to high heaven, although this one obliterates yesterday's highs as well. And then, like a, you know what, it goes right back down to the bottom. Somebody is getting set up. I say it with complete confidence. The bulls or the bears are going to go, what just happened in the next couple of weeks? I don't think it lasts 2 weeks. I'm telling you what, this is earthquake weather. Good or bad, we have a move of 7% of upside or 4.5 to 5% of downside soon enough. And for some reason, the downside will feel stronger than the upside. The VIX futures are going back to try to make a lower low, and they have red ticks concurrent with red ticks in the market. What in the actual F is going on right now? What? It's a race to the bottom. The bulls don't want it. The bears don't want it. The small caps are way off the highs. They were up 1% earlier. Yeah, this yellow box is one. We'll see. And the other one is 601.50. Whoops, I missed it. Okay, so if you have the credit call spread for the 12th on the QQQ, you can keep it. You can sell a credit put spread, but don't do it if you do the math. So trust me on this one. Listen up, folks. Let's describe the situation. This is how to manage a problem trade. Sold the credit call spread. Sold the credit call spread. I can't remember the numbers. I'm going to go with 50 because it's a nice round number. $50 in credit, okay? And it got under fire, and then it went green, and then it went flat on one day when we dipped a couple weeks ago. And I said, trim it, cut it loose, close some of it, or sell a credit put spread for $50. A lot of you took that option. Okay, so now I have $100. I log that as income. Okay, so $100. Now the credit call spread got in trouble, so we needed to roll it. If you rolled it when I told you, you paid nothing. Some of you got credits. I paid $5, I think $5 or $7. So literally 0.07. So I rolled it for nothing. And I said if I roll it, I would sell a credit put spread to the 10th, which was today. And so we got another 50. So let's assume you got nothing to roll and you had 100. So now you have 150. So in the end, what happened? You're still in trouble. You still have a credit call spread in trouble. And you have $150 in credits, thereby reducing the maximum loss to $350. Okay. And that's assuming you didn't reduce it at all. Now, the credit put spread is dead. So I said yesterday, if you took one for today, roll it again. Again, this time the roll costs money. It cost me $40. Some of you rolled for 25, some of you for 50. So I'm going to go with 45. And I told you now the question is, should I add a credit put spread? The answer is yes, because the goal is to reduce the amount of money at risk, but it depends on where you punt it to and your portfolio and your risk appetite. So the math now is back to 100 and 400 because I gave back 50. But if I sell a credit put spread, I add the 50 back and I go back to 150 and 350, which is not a bad situation to be in. We're going to repeat that process until it dies for even. The minute I become even on the trade or small red, I just ditch it. Now, sometimes it's okay to book a loss. If you're tired of seeing it and it doesn't damage your account, it's just a lost trade, you just close it and move on, get it out of your face. Whoa, just lost all my screens. Don't know what's going on. Interesting. So there we go. That was weird. Yeah, I lost all my screens and now they're all back. So I will reshare. I've been hacked. That's the government. Hold on, let me restore everything. Whew. The algo flow is now red, but not divergent. It went from green to red. Okay, SPX 6020 is the highest magnet. So we're right there. QQQ, still 532. We are right there. 602 is by far the largest magnet on the SPY. We are not right there. Okay. So you're asking about MDB, Mongo. We bought the dip on Mongo. I don't remember where it's at. Okay. It spiked on earnings way too much. It hit resistance and it needs to hold 200 in order to see if they want to go back to 260. So I would be a buyer of the dip. You could convince me to sell a put spread, but I wouldn't buy a call. That's the big picture on Mongo. Shorter term, the buyers should be around 204 to 197. There should be some support there. Lulu, we bought the dip, but not with complete confidence, so we didn't buy calls. And the trade is doing okay. If it holds 255 or 250, 256, it has a chance of going back to 262. I'm not holding calls. I would not buy shares. I would invest in it for the long term, but only 20% of the allotment. Or I would sell a naked put to own shares or sell a put spread. And if I'm really looking for upside, I would buy a very tight call diagonal. $601.30 matters. Very short term comment. The VIX is at the lows of the day. They still are hunting yesterday's low, which is 16.82. This is funny. This is extremely strange, and it's funny. Very, very weird. So you go from 17 to 18 to 16.8 in the matter of minutes on the VIX. Maybe a bad headline after hours. We'll see. I jokingly said that they were early pushing the button on this VIX, but you never know. All right, so technically this is approaching like the yellow box. If you fill the yellow box, you finished. You've covered all the unfinished business from the big giant red tick right there, which I believe is the second largest red tick today. Now going from here to 601.70 should be a little bit more difficult, especially at 601.50. I already told you 602 is the largest magnet on the SPY. They're trying to go there. I have pink bars on Discord, the streaming. So in theory, that's where they want to be. Okay. All the credit call spreads and all the credit put spreads worked out. Don't press your luck late in the day. Breaking out of 601.1 should get 601.50. Remember that support line back there? Let's bring it over to here and raise it a little bit. That should be resistance. Short-term comment. And if you look left, that will probably be this little squiggly mark, which was a very bright green candle on the way up. That was a breakout candle that they couldn't hold. So this whole zone, if this were to be a normal price action day, should be an exit point for calls. If I bought the dip for a higher high, I would be exiting inside this yellow circle. But Nick, this is not a higher high. Yeah, it isn't. It's a mile away from higher high. I guess I'm telling you, not every dip is going to be bought to make a higher high. This looks pretty stretchy today. Maybe tomorrow, maybe overnight. If you're fast, you have support at 601.1. I don't know if I would buy puts. If you buy puts here, it's because you're saying we're going to make a lower low. But the VIX just made a lower low than yesterday. Freaking finally. All day we've been looking for that, and it just happened. And in the most bizarre way possible. This is the most bizarre breakdown in the VIX possible. And I'm speaking with regards how the S&P behaved at the same time and how the ES behaved at the VIX futures. And now it's an open floodgate on the VIX. How are you going to buy some puts? With what confidence? With what body language? And now you get the mega caps to do another run. These guys have done a lot. They showed us that this is an area of contention. So maybe they synchronize a push on this one higher and this one at the same time. Then we can go to 603 today, but I would bet against it. 602 is the large magnet from gamma, 602. And that puts us back into the neckline. This 60180, the dotted blue line, I made it long on purpose. That's the head and shoulder neckline that I used for a lesson. But in reality, it's the orange and the blue and the moving averages above it. So it's a zone. I would not be in calls and I would not have the confidence to own puts unless these are free. Like if I made $1,000 today and I wanted to risk 200 or 100 on a put just for giggles and I bought it here, okay. But while the VIX is collapsing, buying a put is counterintuitive. Okay, so if someone is deciding whether they need to do a credit put spread or not, maybe this will help. If I have a trade that goes bad, my goal becomes not to make money. I redefine the trade. Okay, this is a bad trade, a hostile trade. I need to get out of it for as little damage as possible. So if it's a credit call spread, bear call spread, and it's in trouble, I should be okay selling a credit put spread to balance it out. And even if that creates the situation where I'm going to lose on the credit put spread. So if I had collected $90 in credits and I collect another 50, that's 50 I save from losing. Now, mind you, I can lose on both ends, but if I lose $50 less. So if that's your goal to reduce the money at risk, you should be okay selling a credit put spread. And there's also the need to look at your portfolio in general. If I'm bearish in one trade and losing, and all of my other trades are bullish, it's not a big deal. That trade is helping me stay in the other trades. They balance each other out. Man, I can't stand what's going on with the VIX. The fact that I saw it coming, this scenario, and then they lulled us into thinking, no, it's not going to happen. And then they convince us that something else is going to happen, and we go to 18 only to revert to the lowest part and then collapse from there. It just shows you what kind of a volatile scenario we have, to where sense does not need to make sense. So the VIX futures spiked with the VIX, but nowhere near as much as it did. And the fact that the VIX went above and beyond all other levels in the past couple of days, that is a bizarre situation. So let me do this. Let me go see what kind of VIX transactions happened today. How about that? Sometimes, one time we did take a trade based on that. We sold put spreads to buy calls, and it was very, very profitable. $25,000. 25,000, the largest trades are 25,000 calls and 41,000 puts. I'm not so sure I can discern anything from that. Where are the puts? Why am I having a hard time? Oh. Yeah. So nothing that obvious like last time. You did miss a lot today, yeah. All right, we're going to cut off the YouTube. Thank you, YouTube. And I'll see you next time we go live, if we do go live.